So is that the team number one for you?
Team number one, by
now, you
far.
went to Cornell, so does that mean you're just a diehard hockey fan?
I've always been a hockey fan.
Okay.
And when I went to school, I actually didn't go to any of the games because,
really?
because it was really hard to get a ticket. You had to...
hard to get a hockey ticket?
Yeah, you had to sleep outside in a tent to get the ticket. Yeah, I mean, back in the day, this is what it entailed. And
in Ithaca, New York?
I didn't do that, yeah.
Wow.
But then they started playing all the hockey games, or the big game, Red Hot Hockey, in Madison Square Garden on Thanksgiving weekend, and it became a bigger thing.
Okay.
So that's been going on for a couple of years, and I know I came on to talk about that. That's really fun.
That's a fun thing. All right, so you're a Ranger fan. Unbelievable year so far for the Rangers.
So far, but season's early. I mean, season's young, and anything could happen.
Well, who's your team?
Well, I don't know. I mean,
The
kind
Yankees.
of the Rangers. I'm a Yankees guy, Giants.
You're from New Jersey. You got to root for your Devils.
Yeah, I took the kids to a lot of Devils games. It's actually a great thing to take kids, but boy, it's expensive.
Yeah, the Devils are very exciting, though.
Yes,
young players. They're doing a lot.
Yeah, but I mean, Madison Square Garden. Going to the Duke Blue Devils next Wednesday at the Garden against Baylor.
Oh,
so that's
nice.
my next time
That'll be fun.
Longtime listener writes in Guggenheim money behind the L.A. Dodgers.
There you go. That's right.
That's from Mr.
That's
Cinch.
Right. Yep, very
Thank
good.
you.
Yep, I remember that deal getting done. All right, Scarlett Fu, thank you so much. We appreciate Scarlett Fu. She's a host of Bloomberg Television and Bloomberg Radio's Business of Sports. Michael Barr, Damian Sassower take a backseat to Scarlett Fu. Let's be honest here.
More like the other way around.
All right, we got S&P 500. I'm going to call it unched for Lisa Brahma. She hates that term, so I'm going to throw it out there. Nothing happening there. The Dow up about 0.1%. NASDAQ off about 0.4%. Looking at yields, John, the yield's a little bit higher, 4.26%. It wasn't that long ago, maybe a cup of coffee, as Tom Keene would say, that we were at 5% on the 10-year Treasury, 4.26% here. WTI crude oil, a little bit lower, just right around $71 per barrel. Gold off about 1%, $1,980 per ounce here. Bitcoin pulling back big time. Where's Matt Miller here? Bitcoin off 4.4%, 1,900. That's at 41,897. So right around 41,900, below that 42,000 threshold here. So we'll keep an eye on that. Bloomberg Dollar Index stronger today. The dollar stronger against a basket of the big currencies. Bloomberg Dollar Index 1244.88. That's up about 0.25%. So we'll keep an eye on those markets. Right now, let's head down to Washington, D.C. We're going to get world and national news, and we're going to do that today with Amy Mars.
All right, thank you, Paul. Former President Donald Trump's lead is growing in Iowa with about 5 weeks. 5 weeks until the state's first in the nation caucuses. A new poll from NBC News and the Des Moines Register gives the former president 51% support from likely caucus goers. Florida Governor Ron DeSantis comes in second at 19%, followed by former UN Ambassador Nikki Haley at 16%. Bloomberg government reporter Maeve Shee has more from Washington.
Trump is still leading, which is to be expected. That's what we've been seeing all throughout. But we also see that there's a very small gap between Nikki Haley and Ron DeSantis. So we'll kind of be watching to see if the ball moves with future debates, what voters think of them, because they've both been fighting pretty hard for second place right there.
Bloomberg government's Maeve Shee reports the gap between Trump and his closest rivals in Iowa has jumped from 27 points to 32 points. A new poll out by the Wall Street Journal puts former South Carolina Republican Governor Nikki Haley 17 points up over President Biden. This would be a hypothetical race for the White House. The 51-34% lead is bigger than the 4 points former President Trump holds over Biden, but Haley still trails Trump by more than 40 points in recent polling. Ukraine President Volodymyr Zelensky will be heading to the U.S. to meet with President Biden and congressional leaders. We'll get more on this now with Bloomberg's Maria Tadeo.
For Zelensky now, this is about reinstating his message that he needs the Biden doctrine to work, that Ukraine will now head into another year of war, most likely, and the funding, the weapons, and any support they can get from the U.S. administration is crucial. If not, the country, quote, could be in mortal danger.
The health ministry in Hamas-run Gaza says the death toll is now at 18,205. The health ministry does not break out civilian versus combatant deaths. It's Bloomberg's Maria Tadeo. Global news 24 hours a day. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
$10:40 on Wall Street. I'm Nathan Hager. We check the markets all day long on Bloomberg, and right now the S&P 500 is up 1 point. The Dow is up 67 points. That's a gain of about 0.2%. The Nasdaq is lower by 42 points, a decline of 0.3%. Not a whole lot of movement while we wait for the Fed's next decision on Wednesday. We've got a lot of economic data to come as well. But one of Wall Street's most bearish voices on stocks says he thinks company earnings are going to weaken this quarter before a rebound next year. Morgan Stanley chief U.S. equity strategist Mike Wilson says there's a reason why stocks have defied his predictions this year that they'd see a downturn.
You know, the average stock has not done particularly well. It's kind of been a strange year in that regard. You know, our earnings forecast for the average stock has turned out to be, dead right, and same thing for the average stock. And then we've had these, 10 or 20 or 30 stocks which have done extremely well. And they've done an incredible job of cost cutting in particular, which has driven the major average, the S&P 500 earnings up in a way that we did not project. And that has been the difference.
That was Mike Wilson of Morgan Stanley. Right now, the 10-year Treasury is down 12/30 seconds for a yield of 4.27%. NYMEX crude is down 0.2%, trading at $71.10 per barrel. COMEX gold is lower by 0.9%, trading now below 2,000 at 1996.60 per ounce. The euro is at 1.0744 against the dollar. The yen is at 146.38. Bitcoin is down 4.4%. That's trading below 42,000 now at about 41,850. That's a Bloomberg Business Flash, and Bloomberg Markets continues with Paul Sweeney and John Tucker.
All right, Nathan Hager, thank you so much. We appreciate it. John Tucker and Paul Sweeney here live in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. Boy, what a November that was, John. I mean, that was just everything worked in November, and I guess it was just people saying, I think I've seen peak rates here. I'm going to go out there and take some risk on there. And that's what happened in the month of November. Let's see where we go from here. More importantly, how we think about 2024. So let's talk to somebody who does this stuff for a living, Ethan Devitt. She's a chief investment officer for Moneta Group. Ethan, we look back a little bit here. We've got a few days of hindsight here. What happened in November? And then where do you go from here?
It is interesting. You said everything worked in November, and everything's not supposed to work together in a portfolio. The whole point of having a diversified portfolio is to have it really firing on different cylinders so that you get that all-weather effect. And what we saw is that correlation between bonds and equities, which even as we have the downturn a little bit now, we're seeing, again, a correlation between bonds and equities. And this has been really a recurring theme since 22 when they behaved negatively together. And why are they correlating as we're not expecting them to do? It's really because inflation remains so high. And you even mentioned gold and Bitcoin, where we're just seeing risk move all in sync at the moment. And there are very few places to hide to get defensive.
Should I still have a 60-40 portfolio or maybe 100-0 portfolio?
Well, where would the 100 be at this point? Well, it would have been good to have it all in tech stocks, perhaps, but we certainly wouldn't be advocating that. It's been tough for that 60-40 portfolio. We haven't advocated that in years. It worked well. It didn't work at all in 22. It worked really well in the run up to 22. This is where we get into more diversification, into some of those asset classes that the previous commentator commented on that have been overlooked. There's clearly a lot of equities that have been languishing in the current environment, and having that core exposure should still give you some uplift there. But no, we've been looking at getting outside that core portfolio into alternatives for some time. That's got a lot more legs left to run. We think it's a very exciting time to be in alternatives. But, we're watching the market as the year comes to an end. It's really been an extraordinary year.
What's an alternative?
Alternatives, we're looking at private equity, private credit, all instruments that are now in much more palatable, affordable bite sizes for the retail investor. That's something that we've seen a sea change in, and is probably one of the most exciting areas for the retail investor and the retail investment advisor right now, is the burgeoning world of alternatives that are now coming to become available for the retail investor in a way that has never been seen before. That's why there's going to be explosive growth.
Yeah, it's amazing. One of the real amazing stories that I've kind of seen over the last I don't know, 5, 6, 7, 8 years is the growth of the private credit business. Give us your sense of the private credit business. Is that how attractive a business is that for you and your clients?
Well, it ticks a lot of boxes for us. Our clients don't necessarily need income, but they certainly like income as a diversifier. And we mentioned before the importance of a diversifier. What does income do? It should be contractual. It should be paid out regardless of market environment. And having that as an offset to equity market movement is a really nice development. So that's one thing it gives you. It also gives you diversification against the behemoth financial industry, which did hit some trouble in spring of this year. Seems like a very long time ago.
Right.
But we still don't know the long-term effect of interest rate rises on the financial industry. The private credit used to be called shadow banking. That's not something we would call it today, but that's what the press will often refer to it as. It is not within the same umbrella as the mainstream financial services, so it has a bit of diversification there. It can step in when other traditional banks are pulling back, which is what we're seeing at the moment.
Wait, how does a six-pack Joe like me get into private credit? I mean, what's the vehicle? How do I do this?
Well, getting back to some of that democratization that we're seeing in markets. Sorry.
No, you're good.
Sorry about the interference. Getting back to what we're seeing in markets there around the democratization and the availability of these in smaller bite sizes. What we're seeing is that this in private credit is even more available. We're seeing some good income there. We're seeing some good instruments. And again, the fees are there and the brand names are there. So I'd say overall, that's how your average Joe can get in there. Of course, it's complex. It may not have the same liquidity features as a bond. So you need to understand that. And you need to ideally work with an advisor that can explain that to you. So the education piece will take a little bip of time, but once you're there, I think what you will enjoy are the income characteristics, as well as just other characteristics of a private credit type of investment and the diversification that it provides.
Ethan, we're going to hear from the Federal Reserve on Wednesday. Have we seen peak rates? Did we see that maybe late October?
I think we have. Whereas even a month ago, we didn't know that for sure. As the economic data has been softer, the consensus is definitely now coalescing around this being closer to a longer pause, certainly a long-term shift in direction. And we do expect now the next interest rate move to be downwards. When that will be is anyone's guess. It's currently looking at the second half of next year. But there's a lot of ammunition in the tank now for central banks to make that move when they want to. And that's what we think is actually gives us a lot of comfort. It was painful to watch those rises so quickly and so steeply on the way up. But now at least there is bandwidth for there to be a more relaxed approach going forwards. There's not a lot of ammunition in the fiscal tank, but in the monetary tank, we do think that there's a lot more.
Ethan, explain to everybody what happens this time of year with money managers trying to hit their mark.
Well, I'd say there's a couple of things happening around this time of year. There's going to be a little bit of profit taking. There's also going to be on the other side some loss taking. We're going to see investors harvesting those tax losses to offset against some of the significant gains they will have enjoyed this year. Of course, there were losses languishing from last year as well, so there's a lot of that to be taken. One of the interesting phenomena we see is that that's leading to a further divergence in equity markets as the losers are being sold and the winners are being retained. So we see that split happening. That split is ultimately going to create that wedge between the winners and losers to persist for even longer. But I've never seen a bigger focus on tax loss harvesting than we have this year. It's just been fast and furious.
2024, Ethan, what's kind of your outlook here? Because we've had a good, certainly on the headline level, S&P 500, good returns in 2023. What's your outlook for next year?
Certainly not. Well, the surprise has been the resilience of markets and the ebullience of investor appetite this year. We don't see a repeat of that next year. What we do see, though, is a more firming around the current strength because it is an election year. Neither party in the U.S. is going to want to see weakness in markets. It's going to want to talk down the economy. So overall, we're going to expect to see a bit of an election rally. There will be ups and downs, though. We're going to see some uncertainty as some of that political situation moves. And I'd say overall, it's going to be a mixed picture. But just as your previous commentator said that earnings were lower and they were expecting them to solidify at the beginning of next year, we would expect that could again provide more ballast for equity markets.
Ethan, thank you so much for joining us. Ethan Devitt, we always appreciate getting her thoughts here. She is the Chief Investment Officer of Moneta Group, giving us her thoughts on these markets. S&P 500 up about 0.1% here today. NASDAQ off about 0.1%. We'll have more coming up This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. Shares of DoorDash, they are higher. They're up about 3.5%. And this is as it gets ready to join the NASDAQ 100 before the opening bell a week from today. Bloomberg's Ed Ludlow explains the benefits being included.
For one, prestige, right? On Bloomberg Technology, we refer to the NASDAQ 100 as kind of the proxy for the technology sector because it strips out financials. And if you extrapolate out to the NASDAQ more broadly, there's all kinds of things in there. So when you're looking at higher multiple software names and some real true tech names, it's a good place to watch. You get exposure to higher equity trading volumes, and then you're kind of surrounded by your peers.
MongoDB is also set to join the NASDAQ 100s now. Its shares are up about 4%. Now, among those leaving the NASDAQ 100, JD.com, Lucid Group, and Zoom Video Communications. While Apple is said to be simplifying its lineup next year, Bloomberg's Gina Cervetti has that story.
Bloomberg tech writer Mark Gurman says that a decade ago, there were only two main models, a big iPad and a small iPad. Now there are 5 with countless accessories. He says Apple is working to make it less confusing, but the question is whether it will be enough to re-energize the tablet category.
Apple is also cracking down on certain third-party apps to protect its users. Bloomberg's Kimberly Adams has more on that.
Apple shut down third-party applications that enable Android devices to use the iMessage service to communicate with iPhone users. Apple says the app posed significant risks to its customers.
Apple says those risks include users' privacy and security. We have Apple shares right now. They're down more than 1.5%. Those are the company stories we're following. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, taking a look at these markets right here. The S&P 500 up about 0.2%. The NASDAQ up about, actually pretty much unchanged on the day. The Dow's up about 0.25%. Looking at the yields, they are higher. 10-year Treasury up about 3 basis points. Let's call it 4.26% on your 10-year Treasury. WTI crude oil pretty much unchanged here, right around $71 per barrel. Gold lower by about 1%, $1,982 an ounce. And Bitcoin off 4.5%. 41,800, we'll call it there for Bitcoin. So pulling back after a very strong run. The VIX still below 13. I'm calling that out for Tom Keene, of course. Right now, let's head down to Washington, D.C. for World and National News with Amy Morris.
All right, thank you, Paul. President Biden's support for Israel's war with Hamas may be turning into more of a political liability. The civilian toll in Gaza is climbing. The latest CBS News YouGov polls show 38% of Democrats believe the president's showing too much support. That's up from 28% in October. We get more from Bloomberg Government's Maeve Shi in Washington.
This is a time for President Biden where he's really trying to make the focus on the economy, which he's been, kind of working to improve, and inflation, which has been coming down a little bit. And now this Israeli-Palestinian conflict is really alienating a lot of voters, especially among Democrats. There are really big divides on whether the U.S. should be supporting Israel more during this conflict.
Bloomberg government reporter Maeve Sheehy. The poll also shows 76% of respondents don't think their incomes are keeping up with rising prices, 62% think the economy is in bad shape, and 56% blame government spending for inflation. Virginia Governor Glenn Youngkin says voters are correct to be concerned about the risk of a recession, noting that his state is planning for one early next year.
The real estate development side of things is already in recession. We've seen it pull back materially. And so these fears of recession, I think, are well grounded. And I believe that there's real risk next year in a recession.
That's Virginia Governor Glenn Youngkin speaking exclusively to Bloomberg TV's Anne-Marie Hordern. Youngkin is viewed as a potential GOP candidate for the presidency in 2028. Border Patrol leaders are telling lawmakers the Biden administration's humanitarian parole policy for illegal immigrants is a magnet for asylum seekers. Senator John Cornyn not surprised at this.
Everything I know about the border is from the Border Patrol. And, they talk in terms of the push factors and the pull factors.
The Texas Republican is demanding changes to border policies be part of an emergency aid package for Ukraine and Israel. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and John.
All right, Amy Morris, thank you so much. We appreciate that. John, we were talking with Scarlett Fu earlier about the business of sports and this live golf and the PGA Tour, where there's some more reporting out here by Jillian Tan from Bloomberg News saying a Fenway Sports Group-led consortium has been chosen to enter into final negotiations to be a U.S. co-investor in the entity being formed by the PGA Tour, Saudi Arabia's Public Investment Fund, and the DP World Tour. The PGA Tour Policy Board on Saturday reached the unanimous decision to work with Strategic Sports Group, which also includes New York Mets owner Steve Cohen's family office, Cohen Private Ventures, and Mark Lasry, a former co-owner of the Milwaukee Bucks. That's according to a memo sent to players Sunday that was reviewed by Bloomberg News. So it looks like this merger,
so who's not involved?
Exactly. So we're putting the European Tour, which is the DP World Tour, the PGA Tour, and LIV, and the Saudi Arabian money. That's all coming together, presumably. And they need to probably get something done kind of towards year end here.
So that's the end of the year is the deadline that's been set by U.S. regulators, specifically the U.S. Justice Department?
Yeah, and I'm not sure how firm that is and what needs to be done by December 31st. But when you hear folks talking about this issue, they're saying, hey, we got to get something really done on paper by the end of the year. And we just had John Rahm, one of the biggest golfers out there. I think he's the third-ranked golfer. He just left the PGA Tour to go to LIV. So they're still poaching between tours, despite the fact that these two tours are, continuing to move forward to, I guess, merging, if you will.
But you're still going to be watching golf, no matter what.
I'll still be watching golf. I watched the third round out of Greensboro. So I'll be doing that, and as a lot of folks will as well. It's just, I tell you, it's the power of live sports. Still valuable. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we saw Ira Jersey in 731 Lexington Avenue. So we literally grabbed them, pulled them into the studio. We're going to talk to them about what this Fed's going to do later this week. We're also going to speak with Wendy Schiller, professor at Brown University. She's going to join us to discuss President Biden's waning poll numbers amid support for Israel. We also have Zelensky, President Zelensky visiting Washington Tuesday, so that could be very interesting as well. We're going to get the macro call from Alex Morris, CIO at FM Investments. That's all coming up in this hour. And let's kick things off, though, with the Bloomberg Business Flash with Nathan Hager down in D.C.
I'll kick things off, Paul, with some new consumer inflation expectation data from the Federal Reserve Bank of New York. One-year inflation expectations are now at their lowest level since April of 2021, falling to 3.4% for year-over-year inflation expectations in November. That's compared to 3.6% the prior month, and three-year expectations holding steady at 3%. Seeing a little bit of life in the markets, but not a whole lot of major betting before the Fed decision on Wednesday. Kate Moore, head of thematic strategy at BlackRock, says she sees the direction for stocks moving up, and she says it could stay that way even with the data coming out this week.
There's a lot more room to put money to work. I think if the data that we're all talking about comes out in a positive way this week, CPI showing a continued disinflationary trend, the Fed indicating they're waiting, perhaps pausing, although I don't expect them to say that they're going to pause. And then the retail sales data, which is critically important.
And you can hear much more from BlackRock's Kate Moore on the Bloomberg Surveillance podcast. Let's check the numbers, shall we? The S&P 500 is up about 8 points now, or 0.2%. 4612 is the S&P level. The Dow Jones Industrial Average now up 114 points, a gain of 0.3%, trading at 36,360. The Nasdaq Composite is down 20 points, or about 0.1%, 14,383. 10-year Treasuries down 8/32, yield 4.25%. NYMEX crude's down 0.25%, trading at $71.05 per barrel. COMEX gold is down 0.75% at $19.9950 per ounce, just shy of 2,000. The euro 1.0745 against the dollar. British pound 1.2553. The yen 146.39. Bitcoin's down more than 4.5%, 41,800 for a token of the world's biggest cryptocurrency. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Paul Sweeney and John Tucker.
All right, Nathan Hager, thank you so much. We appreciate that. John Tucker and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. All right, you type in Fed Go, and it tells me that we've got a Fed meeting Wednesday. So I think at 2 o'clock, we're going to get the statement.
Oh, the dot plots, too, the economic projections. That's
big.
the
So then you
big
go
one.
dots go, DOTS go. There's a function for everything. So this is, when we have the Fed, that's when John Farrow, Lisa Bromwich, Tom Keene, the surveillance gang, they come back at 1:30 Wall Street time to kind of get us all going on the Fed day.
That's an indication of just how big it is.
That's how it works. They go out for the surveillance little midday brunch, and then they come back and give us some good programming there. So we got Ira Jersey. He's the chief U.S. interest rate strategist for Bloomberg Intelligence. He joins us live here in a Bloomberg Interactive Broker Studio, not phoning it in from Princeton, actually up to the world's financial capital where he belongs, as opposed to the confines of Princeton. Ira, what are we going to hear from our Federal Reserve on Wednesday?
Yeah, so it'll be, the devil will be in the details. Like you mentioned, the dot plot, I think, will be potentially very meaningful at 2 o'clock. I think that'll be certainly more important than whatever tweaks they make to the statement, right? Which we always probably overanalyze the statement, quite frankly. You know, they change one adjective and we blow it out of proportion.
That's your career. That's what you built a career on,
well,
dude.
I try not to. I try to be a little bit more tame about that. But certainly the dot plot will be important because right now, based on where the Fed funds rate is right now, the dot plot has one interest rate cut baked into it.
Okay.
It's very possible that they'll wind up doing at least another, and 50 basis points of cuts in 2024 would, actually be significantly less than what the market's pricing for right now, right? So you can wind up seeing market reaction. It would be very unclear which way the market reaction is, and I think the tone of the press conference could, clarify that tone a little bit. And I suspect, which is a little bit different than some of my colleagues in Bloomberg Economics believe, I think that actually the Fed and Jay Powell will push back a little bit against the cuts that are priced, because the Fed is still in inflation fighting mode, right? And I think that they don't want the market to think that they're going to be cutting very early, because that's loosening financial conditions quite a lot. And because of that, I think that the big risk is to markets on Wednesday is that they say, hey, we're probably not going to cut quite as aggressively as the market's thinking right now.
Well, what has the data been saying? More importantly, maybe what's the trajectory of that data? And put a parenthetical in there. Of course, we get CPI tomorrow.
Yeah, we get CPI tomorrow. Obviously, we had the payrolls report on Friday, which you guys covered very well. The data's been not terrible, right? It's certainly been slowing, right? It's showing a slowing of the economic environment, but it's not falling out of bed. And I think that that's what's important for the Fed, right? In the Federal Reserve's perfect world, in my view, they would like to see a continuation of the decline in inflation, and at the same time, somewhat slower economic growth, but still having some job growth, still having wages growing a little bit, but not as quickly as they were certainly in 2021 and 2022. And we're almost getting to that kind of glide path. So I'm not sure why the Federal Reserve would want to or need to cut early without having a meaningful recession. Now, there are those in the market out there that I talk to that think we're already in a recession, or we're going to be in a relatively deep recession soon. And then, of course, there's another camp, and I'm more or less in this camp, that, yeah, we're having a slowdown, meaningful slowdown, but we're not going to see a recession until later in next year or maybe into 2025.
But when things turn, and I think it was the work of Rudy Dornbus who said this, when things turn, they turn quickly.
That's very true, but the data certainly doesn't show that yet, right? And I think that that's one of the cases where when you still have, when you think about the make of the economy right now and what's growing and where inflation is coming from, it's things like the services sector that is still driving prices higher. It's still where hiring is occurring significantly and where wage growth is relatively high. And the thing is, you don't buy services on credit, right? So this is an issue for why the long and variable lags of monetary policy might take longer than they have during previous cycles. And I think in large part because of, you tend not to, you're not interest rate sensitive when you go to an amusement park or when you go to, do any of the activities that you might do. You go to the, go to the shore, go to a soccer game, right? You don't buy that. You don't buy that on credit, or if you buy it on your credit card, it doesn't matter if interest rate's 22% or 24%, right? That's not what matters to you. But but if you're buying goods, right? If you're buying durable goods like cars and the like, those are the interest rate sensitive sectors where the Fed really has at least some semblance of control in the short term. And as long as services don't fall out of bed, then you can wind up having a quote unquote soft landing.
All right, very good. Ira Jersey, he does it all for us. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Brokers studio. All right, let's switch gears, go a little bit political. We got President Zelensky coming to the States, coming to D.C., meeting with lawmakers to try to unlock some of that aid for Ukraine. Let's bring in Wendy Schiller. She's a professor at Brown University. Wendy, give us a sense of, in Washington, D.C., where Ukraine fits in with all the other news, whether it's from the Middle East or just the coming election. It seems like the Ukraine and the support of Ukraine has kind of lost a little bit of the limelight here. Where are we?
Yeah, I think the momentum, I wouldn't say collapsed, but I think the momentum has slowed considerably. And rather than have this sort of a singular conflict that we've been very involved in and very supportive of Ukraine against Russia, now another conflict has opened up that has really soaked up all the attention, all the emotion and passion, and that is, of course, the Middle East, Israeli-Gaza conflict. So that has really become a problem for the Biden administration, and the tendency in the Republican Party, particularly with the ouster of McCarthy and the replacement with someone who's more conservative and more insular in their view about the United States' role globally in terms of military conflict and support, that has happened at the same time. And so, that caucus is not particularly persuaded that we should be spending billions of dollars to continue to support Ukraine. And notice that they have not yet, although they want to separate the Israeli aid out, they haven't passed the Israeli aid either.
Let's jump ahead to Election Day, and when a voter walks into the poll and pulls the lever or the switch or whatever it is now, are they thinking about Ukraine? Are they thinking about funding for Israel?
I think a small group of people, in particular the Israeli-Gaza conflict, a small group relative to the United States voting population, a small group will have intense preferences, and they will remember either favorably or unfavorably what the Biden administration has done, and then they will now listen potentially to Trump or Nikki Haley or Ron DeSantis on what the government should do. So that I don't think those people swing an election nationally, but there are some communities in swing states where they could really make a difference in their voting. Ukraine, I don't think has ever been an issue that is at the forefront or top of mind that swings electoral decision-making.
Kind of on that front, Wendy, there's a couple polls out, one from CBS News, one from the Wall Street Journal. Biden's support of Israel alienates more Democrats in the new poll. What kind of calculus is the president, kind of working on here as it relates to his support for Israel?
Well, I think here we really see, as we watch, for the next months, before the U.S. public has had a daily dose of Donald Trump. I mean, we just haven't been exposed to the daily dose yet. If he wins Iowa, as we now sort of expect him to, and if he wins New Hampshire, we are going to get multiple daily doses of Donald Trump. And I think the polls will probably reflect a shift a couple months down the line on that comparison. But right now, the Democrats face a real problem because at the congressional level, they are divided on Israel and Gaza, and that division is obviously very public. So going into the 2024 races, you've got House races, you've got a chance to take the House back, you've got Senate seats you're desperate to preserve, and you've got the Biden reelection all converging, and you don't have consensus within the Democratic Party on each of those levels on what the best policy path forward is. And that's a considerable problem. Donations, endorsements, and again, people who are intense about this, those preferences are going to harden in the next couple of months, and you're not going to be able to shake them once they do.
That daily dose that you're speaking of, is the implication that his supporter, or maybe not the core, but people are going to get a little tired of this?
Well, so this is we look at independent voting, right? Especially in swing states, and we say, what has the pattern been? 2018, 2020, 2022, they did not vote for either Trump or Trump-endorsed candidates in big numbers. The Democrats had the advantage among independent voters. Right now, the polling shows that advantage has eroded, not disappeared, but eroded. As he comes back into the limelight and independents are reminded of why they have not voted for Trump or Trump surrogates in the last 3 elections, that's where I think the polling becomes more favorable, if you can put it that way, for Biden in the sense that he has a chance to win those voters back into the Democratic camp, at least at the presidential level.
How do you think this Republican, competitive landscape is going to shake out here? Is it going to be, if and when former President Trump comes back and wins in Iowa and or New Hampshire, as you suggest, everybody will kind of bow out at that point because he will take all the oxygen out of the air?
Yeah, that's a great question. It really depends on South Carolina, obviously. And they've got proportional delegation allocation in the Republican Party and winner take all as you move further down the line in the primary season. So that's how Trump stayed alive in 2016. He didn't do all that well in the early primaries, but he stayed alive and then managed to win many more delegates. So the question is, not only does he soak up all the oxygen per se, but he sets the agenda for the Republican Party. He becomes the symbolic spokesperson for all Republicans running in 2024. And now they're slowly going down to like a 4-seat margin or a 6-seat margin. Their margin has shrunk. And where they won seats, California and New York, are not likely to be as favorable to them in 2024. Presidential election, more voters get out the door on both sides. And if you have a competitive, slightly leaning Democratic district that flipped, that's very tough to maintain. So I think it looks bad for the Republicans on the House side. Also, I'm not sure they can govern. Will we shut the government down in early spring or late winter? Will they pass the debt ceiling or filibuster that? They've got all the same challenges going forward in leadership. And I think it's going to be a very tough landscape. On the other hand, the Democrats are defending 20 seats. The Republicans are defending 10 in the United States Senate. So the odds look very good for the Republicans on the Senate side. And the Senate Republicans have really stayed as far away as they possibly could from the House Republicans. Whether you can do that with Trump at the top of the ticket, that is the big political puzzle, I think, facing the Republican Party going into 2024.
This might be a little out of left field, but is there any doubt that Kamala Harris is the running mate for Joe Biden?
So I have said on Bloomberg that I think Joe Biden is running as long as he's walking, talking, and breathing. I still think he's running. Maybe there's a little bit more doubt there. But Kamala Harris is a big question mark, not from her perspective, but from the Biden team. If you really need a Hail Mary and Biden's still the head of the ticket, do you find a way to have something else for her to do? And she stays vice president until next year, but find a different candidate to be VP. So the Hail Mary might be Raphael Warnock of Georgia. There is no race of note in Georgia in 2024, and certainly no African-American candidate at the top of the ticket statewide. That's a big difference between 20 and 2022 for the Democrats. So I think Georgia slips away. But if you have Raphael Warnock, who's won statewide twice in Georgia, on the ticket instead of Kamala Harris, I think that changes that ticket's odds. So I think the team will have to get creative because right now it doesn't look like it's a compelling enough team to make sure the same people got out the door in 2020 and make sure they'll get out the door in 2024.
All right, just 30 seconds left. I mean, what kind of campaign do you think President Biden will run?
We used to call it the Rose Garden strategy, where the presidents didn't leave the White House. They said they were too busy. Obama did that in 2012. And in 30 seconds, let's see how we can do this. And then he didn't get out the door really until late September, October, when Romney was tied with him in the polls. So I think they're going to do the same thing. I think Biden is not going to travel that much and only get out the door late in the game. And we'll see how he does on the campaign trail versus the quote unquote vitality that we're seeing from Donald Trump right now.
All right, Wendy Schiller, thank you so much. We appreciate it as always. Wendy Schiller, professor at Brown University, kind of giving us kind of the political lay of the land. 2024, John's going to be here in a matter of days, and that's just election year momentum.
And the lead that the former president has over his Republican rivals is really astounding at this point.
Yeah, it's just extraordinary. So it looks like that will be former President Trump, at least at this stage, looks to be the nominee. We'll see how it plays out over the coming months. And there's some primaries and all that kind of stuff that the politicos like to focus on. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Occidental Petroleum has agreed to buy shale driller Crown Rock. It's a deal in $12 billion cash and stock. Bloomberg's Alexandra Semenova has the breakdown.
The company plans to finance the deal by taking on $9.1 billion of new debt and issuing about $1.7 billion in new shares. The deal is the latest in a wave of consolidations in the U.S. energy sector, and particularly in this region where Crown Rock operates. It's the most prolific oil basin in the U.S. This agreement between Oxy and Crown Rock comes as oil executives face growing pressure to keep buybacks and dividends flowing.
Now, that deal expected to close in the first quarter of 2024. Checking with Occidental right now, they're up nearly 1%. Some executive changes at Boeing. Stephanie Pope has been named Executive Vice President and Chief Operating Officer. Pope has been serving as president and CEO of Boeing Global Services since April 2022, and before that was CFO of Boeing Commercial Airplanes. Now, Boeing right now, they're up more than 1%. And BlackBerry, it has a new CEO. John Giamatteo will take over the position effective immediately. Now, the company also says it will no longer seek an IPO for its Internet of Things business. BlackBerry is down about 1.5%. And after months of posting videos on X, former Fox News host Tucker Carlson has launched his own streaming service through his website today. The Tucker Carlson Network, it costs about $9 a month or $72 a year. It includes access to 5 new shows, investigative reports, speeches, films, and short documentaries. He'll also launch his own podcast. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's coming up to 11:22 on Wall Street. I'm Nathan Hager. Stocks are trading mixed ahead of the Fed's next decision on Wednesday, and a lot of economic data to come, including the Consumer Price Index for November. That's due out tomorrow. We check the markets all day long here on Bloomberg. Right now, the S&P 500 is down 1 point. The Dow is up 78. That's a gain of 0.2%. The NASDAQ is lower by 62 points or 0.4%. 8 of the 11 main industry groups in the S&P 500 are higher, led by industrials and consumer staples. Communication services is the biggest laggard on the S&P. 10-year Treasuries down 10/30 seconds. The yield at 4.26%. The 2-year at 4.75. NYMEX crude is down 0.5%, trading at $70.82 a barrel. It keeps declining. COMEX gold is down about 0.9%, 1997.10 per ounce. The euro 1.0744 against the dollar. The yen is at 146.45. Biggest gainer individually on the S&P 500 right now is Cigna Group. It is walking away from merger talks with Humana and expanding stock buybacks instead. Cigna is higher by 16.6%, while Humana is down about 2%. And the biggest laggard on the S&P right now, Eli Lilly. After a study in the Journal of American Medical Association showed people who stopped taking Zepbound, Lilly's weight loss injection, after about 8 months, they regained about half their weight back, and Lilly shares right now are down about 4.1%. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Paul Sweeney and John Tucker.
All right, Nathan Hager, thank you so much. We appreciate it. John Tucker and Paul Sweeney live here in our Bloomberg Interactive Brokers studio in New York City. And you know, John, Nathan was just had that story, the Cigna Group, walking away from talks with Humana. These are two, big-time blue-chip companies walking away because you can't agree on price. You don't see that often, I guess.
Well, at least one of them got a pretty decent boost in the share price today. So, I mean, there is that.
Cigna shares rose as much as 16% as the U.S. market opens Monday, the biggest intraday gain since 2015. Humana shares slipped 3% before pairing losses. I'm just thinking about the poor investment bankers who are not going to get their fee now, John. So they were banking on it. They told their bosses, it's coming, a big fee's coming. Keep that in mind as year-end bonus decisions are.
Did you ever have a deal like that collapse?
Yes, yeah, no bueno, and it cost me, but we got him 2 years later. We got him back together, so and we had a higher fee and a higher dollar amount, so it all worked out. Let's check in with a professional. I'm going to talk a little fixed income here. We had my 10-year Treasury go from 5% all the way down to today, 4.26%. In, like as Tom Keene would say, at a cup of coffee that happened. Alex Marsh joins us. He's CIO of FM Investments. Alex, it just seems, I'm not a fixed income guru, but boy, that move seemed pretty dramatic in the 10-year Treasury. How did you kind of see the move in rates there over the last, 4, 5, 6 weeks?
Yeah, I mean, it's been dramatic. I mean, there's no two ways around it. And this is exactly what happens when, good news starts to reverberate in the rates market. When a month and a half ago, when we were talking about Treasuries together, we said it's always good to be early on that trade because if you're just a little early, you get that great price movement. I mean, if you look at the actual price of the 10-year and you are holding it, you're thrilled. Your mark-to-market gains are great, and you're still clipping a 4.5% or greater coupon. If you're buying that today, though, slightly different story. You may want to wait for the next auction and a fresh coupon to kind of reset the level of price appreciation you might get if rates continue to go down.
Well, Alex, Paul missed out on 5%, but is this a screaming buy?
I think the 10 year's a good buy. I really like the 20-year at 4.5%. Yes, you get some added duration, but the 20-year, just because it seems to be unloved, and every now and again the Treasury Department decides that it's so unloved they'll stop issuing it, but they come around every time. You get an extra 25 basis points of yield for the same risk, no credit risk. And you get a little extra pop when things go your way for not that much added downside when things don't.
I don't know. Are you willing to tie up your money for 20 years?
No, please.
Well,
20 minutes.
You can always sell it.
You can always sell it.
Get a nice coupon. That's the best part.
Hey, Alex, I'm looking at the Bloomberg Index browser, INGO, and all the fixed income. It's all in the green so far year to date. But boy, the real outperformance has been the U.S. corporate high yield, up 10.1%. What happened there? I thought we were going to have a recession.
I think the bond market disagreed.
Yeah.
And the recession fears, I think, were based largely on this theory that, this time was the same as every time in history, when, maybe we proved that this time was actually different. The Fed took an aggressive stance and raised rates because they had to, and then they have been, recalcitrant and not just backing off. And I think that the recession would have hit, and you would have seen more of it, if they had backed off. Plus, they did themselves a big favor this time, and it was in their rhetoric, if nothing else. They didn't actually define what a soft landing was, and they kept pushing out when they had to actually declare soft or hard landing or no landing at all. And as a result, they were able just to kind of keep pushing the market and sentiment forward. And then, look, if you want any more proof that people think that, bonds are good, equities are good, everything's good, just take a look at what sentiment is for the coming 6 months. I mean, bonds having a good set of days have triggered this sort of everything rally. And you kind of question what is actually going to make the stock market go down. Don't get me wrong, there's probably a lot of things we could think of that are pretty scary that would, but for the short term, it seems like none of them are, immediately between us and the horizon.
Get back to basics for a moment, if you would, for me, because I'm a dummy. Who buys for price appreciation and who buys for yield at this point? And does it matter?
Well, I think if you're in the bond market and you're really in the bond market, particularly high yield, you're going to need some price appreciation, right? Because if you look at high yield bonds today, many of them were issued a year, 2, 3, 5 years ago, and they have much lower coupons than you might expect, right? High yield is the theory you're going to stick around to get your coupons plus that price appreciation. If you're a pure yield buyer, you should be shopping around in short-term paper and short-term treasuries, right? There you're still going to earn 4 and change, and there's little risk to it, and things are going to mature, or you're going to keep rolling them as you actually should, and you'll be fine. But anyone who really is looking at this 3 years out now really cares more about price than yield, because, as you point out, you don't want to be stuck into a bond for 10 or 20 years. Very few people, other than large institutional buyers, insurance companies, tend to buy something that far away and actually see its maturity date.
We've heard from more than one invested professional that 60-40 might be dead. What's your view?
Yeah, I feel like everyone has said that, but it seems to come rallying back, right? If you were just purely long equities, you had a long road to hoe here. If you were purely long bonds, same thing. I'd have a hard time telling someone, even a relatively or modestly fresh and young investor, that bonds are not going to provide some meaningful return and some meaningful stability to their portfolio. And anyone who's against 60-40, in the long run, I think has to accept a much more volatile portfolio. Bonds have been volatile the last year or so, but historically, when you have a well-diversified portfolio, particularly of credit, you get a much more stable side to it. And deep down, the average investor, all of us as investors for our own accounts as well, worry about volatility. It sounds great on paper and you can stomach it when it looks like a 10 number or a 12 number, but then when you see it happen, there's a lot of red on your statement, you feel a lot different. And I think that's what folks miss if they just abandon some of these traditional, more balanced structures.
Alex, did we see peak rates, I guess, late last month or late October?
I think we did. Maybe not forever, but certainly if things keep going to plan, I think we did.
And the dot plots, Wednesday, as you take a look at those, give us an idea of what you expect to see in terms of the future path for the Fed with cuts or on hold or whatever.
Well, I think the dot plot will show a more dovish view. You're going to see a few governors who accelerate cuts into the first half of the year, but by and large, I think most of them are still pretty centered around the middle of summer to the back half of the year. And I think it'll be very interesting to watch the Fed Speak Index that Bloomberg posts to see what really happens, because the last 20 or so meetings have followed pretty much the same format, less so the last one or two. The chair comes out and gives a very well-prepared, simple, short message that's easy to understand and parse, has a slightly more dovish tone to it. Then the Q&A starts, and it's this slam poetry session of shouting down the equity markets. And I think you're going to see a lot of questions about, hey, equities have rallied of 100 handles on us. What now? Is this the turning point? And Jerome Powell is going to have to walk some of that back. I think he, above all, will make everyone very acutely aware that he's not giving up on higher for longer yet, even if some market sentiment has already declared it dead and gone.
All right, Alex, thanks so much for joining us. Always appreciate checking in with you. Alex Morris, he is the CIO at FM Investments. Talking a little bit credit there. Yeah, it was good back, just several weeks ago. We can get 5% on your 2-year, on your 10-year, on your 30-year, kind of across the board, sitting right around 5%.
I wish Lisa Abramowitz were here, because we have the results of auctions. The 3-year notes drawing 4.49%. The U.S. awards 49.5% of 6-month bills to indirect bidders.
I have no idea.
Now, if you can tell me what that means.
No, that's why we have Lisa Abramowitz. That's why we have Ira Jersey. They tell me the auctions are important. I just kind of wait for the news if and when they don't go well. And we have the Bloomberg News story. Then I say, oh, the auctions didn't go well. But otherwise, I just assume, since it's the United States government, that's going to work like clockwork, Right now, let's head down to Washington, D.C. We'll get world and national news, and we will do that with Amy Mars.
All right, thank you, Paul. Former President Donald Trump's lead is growing in Iowa, about 5 weeks until the state's first in the nation caucuses. A new poll from the NBC News Des Moines Register giving the former president 51% support from likely caucus goers. Florida Governor Ron DeSantis comes in second at 19%, followed by former UN Ambassador Nikki Haley at 16%. Bloomberg government reporter Maeve Sheehy has more from Washington.
Trump is still leading, which is to be expected. That's what we've been seeing all throughout. But we also see that there's a very small gap between Nikki Haley and Ron DeSantis. So we'll kind of be watching to see if the ball moves with future debates, what voters think of them, because they're kind of they've both been fighting pretty hard for second place right there.
Bloomberg government's Maeve Sheehy reports the gap between Trump and his closest rivals in Iowa has now jumped from 27 points back in October to 32 points now. A new poll out by the Wall Street Journal puts Nikki Haley 17 points up over President Biden in a hypothetical race for the White House. The 51 to 34% lead is bigger than the 4 points former President Trump holds over Biden. Haley still trails Trump by more than 40 points in other polls for the Republican nomination for president. Congress is expected to vote this week on an impeachment of President Biden. Congressman Tony Gonzalez of Texas supports the impeachment because he says the White House is ignoring the problem it's creating.
I've been very pragmatic, try to find solutions, and it's very clear that this administration just does not care.
Congressman Gonzalez of Texas supporting the impeachment for two reasons. He says one is Border Patrol policy, and the other is the pullout from Afghanistan, which he says abandoned U.S. allies. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
$11:40 is the time on Wall Street. I'm Nathan Hager. We check the markets all day long here at Bloomberg, and right now the S&P 500 is up 1 point. The Dow is up 103 points. That's a gain of about 0.3%. The NASDAQ is down 51 points, a drop of about 0.3%. So not a whole lot of movement, not a lot of big bets in this market before we get the latest consumer price index for the month of November. That's due out tomorrow. Markets will see then whether the disinflationary trend is continuing. That, of course, ahead of the Fed's next policy decision, their final decision of the year of 2023. That's set for Wednesday. Sarah Hunt, Chief Market Strategist at Alpine Sachs & Wood, says the biggest unanswered question for next year is, where's growth going to go?
Can earnings really hold up or grow 11% or 12% in 2024 when we have that come down of inflation, where some of the earnings that were higher were because of higher revenues because of inflation? You had this sort of rolling global slowdown, rolling slowdown in sectors in the U.S. Now China's on the slower end. If they stimulate, is that going to help? Is it enough to change the process of next year, and can we keep margins where they are? I think all these questions are unanswered.
And you can hear more from Sarah Hunt of Alpine Sachs & Woods on the Bloomberg Surveillance Podcast. 10-year Treasury right now down 13.30 seconds. The yield 4.27%. NYMEX crude is down 0.25%, trading at $71.05 per barrel. COMEX gold is down 0.8%, 1998.10 per ounce. The euro 1.0749 against the dollar. The yen is at 146.48. Bitcoin is down 4.75% now, trading right around 41,700. That's a Bloomberg Business Flash, and Bloomberg Markets continues now with Paul Sweeney and John Tucker.
All right, Nathan Hager, thank you so much. We appreciate it. John Tucker and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio, streaming live on, what's that internet thing? YouTube? YouTube.com?
I think it's YouTube.
Yeah, there we go. Here's a story that I saw, and I wanted to bring up with Tom Keene, but didn't get to it because I know Tom likes to, record music. Apple dangles rewards for musicians to use high-end audio format. Apple is offering incentives to artists and record labels to produce music using a spatial audio technology that surrounds listeners in sound. I mean, Apple's in everywhere.
Don't we call that stereo?
Yes. Starting next year, the company plans to give added weighting to streams of songs that are mixed in Dolby Atmos technology. That's according to Knowledge of the Matter. That could mean higher royalty payments for artists who are first to embrace the technology made by Dolby Laboratories, said the people who asked not to be identified because the change hasn't been announced. So they're going to give you, I guess, incentives.
They're going to give you incentives to try to record your music so that it sounds better?
I think so. I got to ask Tom Keene. Listeners wouldn't necessarily have to play the Atmos version of a song for artists to benefit. It only matters that the song is offered in that format.
Oh, it sounds like you're going to have to buy a new piece of technology, pony up for it to listen to this music and get the full impact.
Mixing music in Atmos is broadly affordable, according to the people, making it worthwhile for established artists and labels to participate in the hope of seeing a boost in royalties. So
I don't think a lot of people know. You referencing Tom Keene, that he started off as like a folk artist or something along those lines. He plays guitar.
Yes.
And somebody said he sings, and he had an album out years ago. No, it's like, so I have not heard it, but yeah, no, that's his background.
All right.
Because he used to. I'm heading up to go skiing in Vermont next week with my son. And that used to be his stomping ground. He would play whatever band. Yeah, in the on the Killington Road, the access road as you go up. What is it on the left? Wobbly Barn.
Yeah.
And all these places years and years ago.
Tom Keene back in the day. Yeah, that would have been. There's got to be some video out there somewhere. All right, let's get back to the business, and let's talk a little fixed income. Gautam Khanna joins it. Oh, Mike McGlone. Let's go to Mike McGlone. Miami Mike, as Jess Men likes to call him. Miami Mike, he is down in the great city of Miami Beach, which is high season now, so Mike charges extra for these, interviews here. Mike, Bitcoin, I'm seeing it down at 5% here. Just give us the latest on what you're seeing in Bitcoin, because it had a nice move higher here, breaking through 40,000, then 42,000.
I think the key way to look at Bitcoin, Matt and Paul, is a significant leading indicator. So it's indisputable on a 24/7 trading risk asset basis. There's nothing that compares. So it's just like every risk asset in 2022, they all went down, and like all risk assets this year, they're going up and they're strong. But it's one of those things that looks like it just got way too stretched, got up to about $44,000, and it jumped so fast from around 25 right before all this, I would say, enthusiasm for this ETF in the U.S. So it's about a month away. We're supposed to get, I hear it's almost 8 ETFs that might track the crypto, and I think that's one way to look at it. It's a great leading indicator. It's coming back, and I think it's showing just a little bit of that irrational exuberance of risk assets just going up too fast, too far, and all this hopium for the Fed to be cutting rates soon.
All right, with it's John, by the way. The ETF, is that sort of like do investors or potential investors see that as some sort of blessing by regulators or whatever, that hey, this is legit Bitcoin?
Yeah, John, it's just a matter of time. I mean, it's way kind of past. We have futures in this country. And we have spot ETFs that track in many other countries, most notably in Canada. And it's just been the U.S. has been kind of dragging their feet, the SEC. But it looks like it's way past it now. I mean, firms like BlackRock are quite significant. When they say it's time to launch ETF, the U.S. just kind of follows, and they're seeing the demand. So, but this is also backed on demand. So I look at it as the way I like to describe it also is you can't really hold gold anymore without Bitcoin in that space. And it's proving true again this year.
Wait, explain that. Why is that?
Because, well, gold is it's the classic store value, but now we have this digital version. It's also known as a digital version of gold. And the difference is, one of the key differences, it has that definable diminishing supply, but you can get access on it and track it on your phone. So in a world going digital, the way I see it is...
I can't make a piece of fine jewelry out of it either.
You can't, but you can transact, and so you can transport it, transact with it, and travel any place you want and keep that code in your head, and you can bring value with you. It's just one of those things that was just a matter of time. You can do it. Now is Bitcoin the way to do that? Now you can do that digitally with dollars through crypto stable coins and crypto dollars, but Bitcoin's the one that's really more of the leading indicator. And the one thing to remember about Bitcoin is it's just such a perfect trading vehicle. Trades never 24/7. It's no one's project or no one's liability, and it has a good leading indicator track record.
So when these ETFs come out, is every ETF provider going to have a Bitcoin ETF, or is it only going to be, I don't know, BlackRock or I don't know who?
I think it's more the the former. It's right now. It seems like everyone is trying to. Now, people have been trying to launch these for almost a decade, and so that's the key thing. It's just like gold. There's so many gold ETFs now. There's a few that really dominate. That's GLD is the main one, but there'll be one, and there'll be a major fight for who's going to be the predominant ETF. I think that means a lot of marketing. Now, we're already seeing a lot of marketing on things like GBTC and those other ETFs, but it's more of an exchange traded product. But it's just, to me, a major wave that I think the market's already priced in a lot of. And I look at in other ways, this is a good leading indicator. And now we're starting to realize that we might not get those Fed eases that everybody expects. And that's been a key thing that's been wrong this year, and that's been right, is the market expectations for eases have not happened. Every single time you hear, they're going to ease within, 8 to 12 months, it hasn't happened.
Mike, can we just back up for a second and real quick give us your view of just the commodity space overall? Disinflation, inflation, where are we?
Disinflation, it's a clear bear market, and it's a question of what stops it. The only major commodity that's up this year is gold, and that was up around 15% for a while, and it's only 9% now. But it's a clear bear market. So we have energies down about 20% the sector, industrial metals down about 20% the sector, grains down about 20% the sector. The key question is what stops it. We haven't really felt the full effect of the tightening yet we're supposed to be easing, and I'm worried about the key thing to worry about the stock market, about the commodities. They're showing a global recessionary tilt. That's what commodities are telling us right now. And if the stock market can keep going up, great, then maybe commodities will stabilize. But if the stock market goes down, you have a more reason for pretty severe deflation to be the top of the subject by this time next year.
And for me, the commodity to follow, lean hogs. Lean hogs are down 22% year to date. Bacon, that's what I'm talking about. Mike McGlone, thanks so much for joining us there. Mike McGlone, he's a commodities strategist, guru, ensconced down in our Miami Beach office. Who's better than Mike McGlone? This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. Cigna is ending its talks with Humana and is planning a $10 billion buyback instead. We have Bloomberg's Katie Greifeld with more on that story.
It would have been one of the biggest deals of the decade, creating a $135 billion giant. But according to people familiar with the matter, while you had the two sides agree on strategy, Cigna ended the discussions after failing to agree on price, again, according to reporting. Now, this was a hurdle made higher by the fact that since news of the merger talks were announced, that Cigna shares had dropped significantly.
Cigna right now up about 16%, Humana down more than 2%. Two private equity firms wanted by Macy's. Sources tell Bloomberg the department store chain has received a $5.8 billion buyout offer from Ark House Management and Brigade Capital Management. We get more from Bloomberg's Abigail Doolittle.
Apparently, this group thinks that a turnaround could be executed better if Macy's is private. And of course, CEO Jeff Gannett, he is leaving in the spring. So it's sort of a clean break if it were to happen. Now, we do have Morgan Stanley saying that the share offer, $21 per share, is a little bit low. But JP Morgan notes that the investor group said that upon due diligence, they may be willing to raise it.
Macy's is up about 19%. Goldman Sachs Group is reshuffling its senior executives in its $110 billion private credit union. It's in a bid to double its assets. The revamp will include Greg Olafson becoming global head of private credit, James Reynolds becoming the bank's global head of direct lending, and Kevin Sterling, he's taken on the role of global head for investment grade private credit and asset finance. Goldman is up just a fraction. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, John Tucker and Paul Sweeney live here in the Bloomberg Interactive Broker Studio, looking at these markets here. Really unchanged on the S&P 500. The Dow's up about 0.25%, and the Nasdaq's off about 0.3%. Yields slightly higher here. The 10-year Treasury up about 5 basis points, 4.27% on your 10-year. WTI crude oil pretty much unchanged, just above $71 an ounce. And again, the big move is Bitcoin, off 4.8%, 41,680. So big move now. Right now, let's head down to Washington, D.C. We'll get rolled in national news with Amy Morris.
Thank you, Paul. President Biden's support for Israel's war with Hamas may be turning into more of a political liability as the civilian toll in Gaza climbs. The latest CBS News YouGov polls show 38% of Democrats think the president is showing too much support. That's up from 28% in October. We get more on this from Bloomberg Government's Maeve Sheehy in Washington.
This is a time for President Biden where he's really trying to make the focus on the economy, which he's been kind of working to improve, and inflation, which has been coming down a little bit. And now this Israeli-Palestinian conflict is really alienating a lot of voters, especially among Democrats. There are really big divides on whether the U.S. should be supporting Israel more during this conflict.
It's Bloomberg government reporter Maeve Sheehy. Russian opposition leader Alexei Navalny has disappeared from the prison where he's being held. Navalny was scheduled to appear before a district court via video link. His spokeswoman says his allies have not heard from him in more than 5 days. He's serving a 19-year sentence in a Russian penal colony. Navalny's been in custody in Russia since his detention in January 2021 in a Moscow airport, where he arrived after he spent months in Germany recovering from a poisoning by a nerve agent. Barbie's looking a little less pink and a little more gold. Bloomberg's Karen Moscow explains.
Greta Gerwig's Barbie dominated the Golden Globe Awards nominations with 9 nods for the blockbuster film. The nominations included Best Picture, Musical, or Comedy, as well as acting nominations for Margot Robbie and Ryan Gosling, and 3 of its original songs, including... Barbie was closely followed by Oppenheimer, which scored 8 nominations, including Best Picture Drama. The television categories were dominated by Succession and FX's The Bear, and the winners will be announced January 7th. Karen Moscow, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. John and Paul.
All right, Amy Morris, thank you so much. We appreciate that. You know, I'm not into this whole weight loss drug thing, but I know it's going to be just crucial for so many people out there, which is good news. Here's some news here. Eli Lilly, people who stopped taking Eli Lilly's Zepbound after about 8 months regained half the weight they'd lost a year later, yet were significantly thinner than when they had started the obesity drug. That's according to a study. Taking Zepbound for 36 weeks resulted in a 20.9% loss in body weight. It's according to a study published Monday in the Journal of the American Medical Association. But after 88 weeks, a group no longer taking the drug after the first 8 months still had lost 9.9% of the weight. Those who stayed on the drug the entire time lost an average of 25.3%. So that's meaningful.
So it suggests to me that in order to get the maximum benefit out of the drug, you have to keep taking it. You can't go, which raises the question, why is Lilly stock now down 5%?
I don't know. I kind of took it as a win-win. If you stay on it, you're really going to lose a lot of weight. And even if you go off it, you're still going to be better off than you were before. It seems like a win-win, you know? So I don't know about this whole stock market thing, John. It's a puzzle to me.
And of course, this, I suspect, I don't know the method of delivery for this particular drug, but it's an injection. And what we're looking for is the holy grail for all these drugs, which would be something you could ingest in pill form.
Just take a pill form, yeah. Earlier studies have shown that people who stopped taking popular obesity drugs from Lilly and Novo Nordisk, called GLP-1s, are prone to regaining the weight. Still, the results indicate that some benefits are retained a full year later. So that's pretty, I don't know, it seems like it's a pretty good deal. And for a lot of people, this is going to be so important. And for me, the big issue is who pays for it? I mean, you know, you got insurance. I don't know how that's going to work.
And the need for it.
Yes. The need is out there, particularly in this country. That's what the companies
Don't be looking over here.
Yeah. The question is, who pays for it? We'll have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, boy, this is a good one. We're going to talk to Peter Ingram, CEO of Hawaiian Airlines. He's going to discuss their deal to merge with Alaska Airlines. So that's coming up in just a moment. Plus, Martha Heller, CEO and founder at Heller Search Associates, discusses open tech roles and the outlook for tech hiring amid a softening job market. Then we're going to talk a little bit more fixed income. Kevin Nicholson, global fixed income co-CIO at Riverfront Investment Group. I think that's down in Richmond, Virginia, if I'm not wrong on that one. All right, let's kick this whole hour off. I think we'll do that with Charlie Pellet.
Thank you very much, Paul Sweeney. Here's what's going on. We have stocks right now. We are looking at a mixed picture on Wall Street. Right to the numbers here with the S&P. Little change right now. Busy week for eco data. Of course, we got the Fed meeting and decision and press conference later in the week. Right now, we've got the S&P up 1.4605 on the S&P. That is a gain right now of just about 0.1%. This time of the year, a lot of people focused on that year-to-date number with the S&P 500 index so far this year up by almost 20%, up 19.9%. We've got the Dow up 89 right now, higher by just about 0.3%. The Nasdaq Composite Index, though, in the red, trading lower by 45 points, down by about 0.4%. 10-year yield 4.27% with a 2-year 4.76%. Spot gold is down $22 the ounce to $19.82, down 1.1%. And West Texas Intermediate crude is down 0.2%, $71.11 right now for a barrel of WTI. Macy's shares, they are surging 19.44% right now. Macy's has received a $5.8 billion buyout offer from Ark House Management and Brigade Capital Management, a wager that the retail giant can execute its turnaround better as a private firm. Dana Telsey is the CEO of Telsey Advisory.
I think basically this is an offer that is at the beginning of the conversation, given it's subject to more due diligence. And they mentioned the real estate part. And we've heard this many times before with other offers from Macy's, whether it was Jana Partners was splitting off e-commerce, whether it's Starboard and real estate, or even Hudson Bay a while ago. What's difficult about the real estate is that no one in the public markets has access to the information about what each of these stores are worth.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. Again, right now, Macy's shares up by 19.4%. Among the names reporting after the close of trading today will be Oracle. Oracle shares up now by about 1%. Again, recapping, U.S. stocks are trading mixed. The S&P 500 index up 3, a gain there of 0.1%. Nasdaq down 0.2%. Dow Industrials up by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Talk about an upgrade. John Tucker's out. It's something about working more than 2 hours in a row. So he's out. But in for John Tucker, Jennifer Ryan for the next hour. How about an upgrade there?
Exactly. That's how I like to think of it.
How good is that? Equality team editor, right?
That's correct.
What's going on with these presidents? And I mean, what's happening there?
It's really interesting because you've got complaints that were mentioned everywhere from the New York Times to Saturday Night Live that they really weren't meeting the moment in their answers to Congress. And now that is kind of coming home to roost.
Wow, it is just amazing how that unfolded last week. So I guess equality editors are thinking about that kind of stuff out there. So anyway, Jennifer Ryan, thanks so much for joining us for the next hour. Get us through. We appreciate that. Looking at the markets here, I tell you, look at the indexes, not a lot happening here, but Abigail Doolittle's here. So she knows what's happening in markets. Even if there's nothing going on, she's got some good stuff. Abigail Doolittle, she covers all these markets for Bloomberg, joins us here on our Bloomberg Interactive Broker Studio Abigail, what are you looking at?
Beneath that surface of nothing happening, at this point, the S&P 500 doing a little bit more than what it had been doing, even though it's not up even 0.1%. That's how small the moves have been, fractional. On above average volume, I should note, we do have some big tech names, however, selling off in a pretty significant way. Apple down 1.8%, Microsoft down 1.5%, NVIDIA, Meta, Amazon, these are all the big point decliners on the S&P 500. Meta down as much as 3.7%, NVIDIA down 3%. We also have Google down 2%. Tesla down 2%. The list goes on and on. I think that's actually the entire Magnificent Seven, but then there's some other tech names behind it. I think a piece of it is probably yields right now. We do have yields backing up out of the last 6 days. The 10-year yield has been higher 5 of those days. We, of course, have the FOMC on Wednesday, and there may be some expectation that the market action we've had in recent weeks where the 2-year yield basically went from 526 all the way below 450, it's back up above there, was too much, and that the Fed may not necessarily support that. A little bit of rewagering those Fed bets, I would say, is weighing on tech.
So I guess one thing I'm really wondering is, what your thoughts are for tech next year, because, I mean, we've just seen so much of the AI hype cycle continuing. Is that set to continue, or are investors going to start saying, hey, can we please start seeing some more earnings off of this?
That's probably $1 trillion question in a way, everybody wanting to know whether or not AI is going to be the equivalent of the internet, or is it going to be, what was the last big fad that just sort of went bust? I don't even, like pets.com, I know that that's just a piece of the internet, or is it going to go bust? Based on the little that I know about it, I will say it's not my area of expertise, but last week, Lisa Su, CEO of AMD, they unveiled their AI chip, and she talked about the market as a $400 billion market for AI chips over the next 4 years, which would suggest that there is some heft to it. NVIDIA, of course, has been on this sugar high because of AI, up more than 200%. I think probably the other question around it, I think that it is real. The numbers are real. Is this year's move overdone? So are we going to see some sort of pullback next year? And I think that it will depend on, to your point, the earnings. I mean, we've had NVIDIA put up some monster guides, in part because of enthusiasm around AI, but they've been coming in. Next year might be, it's hard to know.
Where do we think the leadership is in the market here next year? Is anybody saying that it's going to be something different than the Magnificent Seven? I mean, I know this, Wall Street strategists are out there talking about 2024. Is there anybody saying what's going to lead this market?
Well, you're reminding me of a chart that I'm going to attempt to pull up in the Bloomberg terminal right now that I will then describe to our listeners, because a lot of people are talking, of course, for a rotation into broader sectors and small cap. Yep. Some are even saying that this will be the year of value. Well, if you were to look at the chart of value relative to growth, it's essentially a massive cliff dive over the last 2 decades and then stabilize around the bottom. Whether or not we're going to come off of that bottom, it's hard to say. I've heard so many people talking about that each year going into the year. I would say that there are some people calling for that kind of diversification. It just hasn't worked out in any other recent year.
Okay, very good. Abigail Doolittle, thank you so much for joining us here. Abigail Doolittle covers all the markets for Bloomberg. We want to get to our C-suite discussion. A big M&A trade in the airline business, Alaska Airlines and Hawaiian Airlines. Alaska said that it will be buying Hawaiian for $1.9 billion, $18 a share, plus $900 million of Hawaiian's debt. Joining us right now to talk about this transaction, Peter Ingram, the CEO of Hawaiian Airlines, joining us via Zoom from Hawaii. Good for you, my friend. So let's talk about this. Peter, talk to us about this transaction. The market's unsure whether this deal is going to go through. What's the message you're giving to the market today about why this deal should be done?
Well, we feel very good about the deal that was announced. I think it's a good deal for Hawaiian Airlines, Hawaiian Holdings shareholders. It's also positive for Alaska. I think it sets the company up, the combined company up very well to compete effectively in a very dynamic airline market. And obviously, we're going to work through the regulatory process over the next 12 to 18 months, but we expect this transaction to close.
I want to pick up on that a little bit because, of course, the Alaska Airlines investors were really spotted that right away, this issue about getting this past the regulators. And this is not an administration that's very friendly to these big mergers. So what's the main point that investors should be thinking about, you know, to put some meat on this idea that the regulatory process will go through okay?
Well, I think the regulators will look at this, you know, as an individual transaction and look at it on its own merits. And what they're going to see is that you've got two airlines that have very complementary networks. We have, you know, big areas of our network where we don't currently compete with Alaska. They also have huge parts of their network where we don't overlap at all. The amount of overlap is very limited, and I think when people look into that and dig into it, that's what they're going to see.
Alaska Airlines, some of their shareholders are skeptical of this transaction, suggesting that Hawaiian will not return to 2019 cash flow levels. We've got Southwest coming into the market. Talk to us about kind of the profitability of your company in today's market.
Well, we feel very good about our standalone business plan. This was a deal that came along and provided us a new alternative, but we were working very aggressively to better our own standalone prospects. Demand remains very strong in our core markets between the U.S. mainland and Hawaii. We've seen good recovery in the Japan part of our business, which is a key piece that had lagged recovery during the pandemic, but really started to come on since May of this past year. We're continue to be the market leader in our neighbor island business, which represents, you know, roughly 20% of our revenue pre-pandemic. So as long as we compete effectively, I think there's a good market position for Hawaiian Airlines.
I mean, you mentioned Japan. I'm wondering if you can talk a little bit more about flights coming in from Asia, because with this strong dollar, it might be something that, you know, is putting a bit of pressure on you there.
I think that will hold demand back a little bit. Obviously, you know, when we were pre-pandemic, the yen was trading 105, 110 to the dollar. Now it's in the mid 140s. So that's a considerable amount of inflation that a Japanese visitor looks at when they're coming to Hawaii. But we saw strong recoveries in Australia, from South Korea, and now even you know, Japan has come back over the course of this year, and we think that'll prove to be a steady recovery going into next year. The affinity of the Japanese travelers have for Hawaii is really unparalleled. There were about 1.5 million visitors each year before the pandemic, and it may take a little time to climb back to those levels, but we think demand is going to be very strong over the long term.
Peter, I'm taking a look at your balance sheet, and I see you've got about $1.3 billion of debt maturing in 2026, a big bullet there. What's the plan for that, assuming this transaction does not go through? And how much of your balance sheet kind of brought you to the table to sit down with Alaska Airlines?
Again, we were really confident and remain confident in our standalone plan. We've got considerable fleet assets that are unencumbered. We've got new 787s coming on against which we can borrow, and that $1.2 billion of that maturity in 2026 is represented by a loyalty bond, financing that was raised against our brand and our loyalty program. And so with that coming due, we would have those cash flows to be able to do a financing, and it was under collateralized as it was. So I think the prospects for us continuing to be able to fund the business are very, very strong.
One thing I wanted to ask you a little bit about is your costs, particularly your fuel costs. I mean, regardless of whether or not this deal goes through, this is something that's been plaguing a lot of people in your space. And so can you talk to me a little bit about what your expectations are there and how you're going to manage it?
Well, I don't have a crystal ball on where fuel prices are going, but I do know that if we look back over the last couple of weeks, we've actually seen some relief in the fuel price numbers, and that, you know, as we forecast. We just use a forward curve going forward. So right now, the outlook is a little bit better than it used to be, but fuel prices are a part of our industry, have been for a very, very long time. For most airlines, it is either the largest cost item or the second largest cost behind salaries and wages. So we will do what we can to conserve. We have a hedging program that helps us smooth out some of the volatility, but we aren't making bets on where the fuel prices go. I don't think that's what our investors want us to be doing.
Peter, as you and Alaska Air execs sit down with the regulators, what are you prepared to do to get this deal approved in terms of maybe routes that may need to be divested, or how flexible can you guys be?
I'm not going to get into any of the specifics on that, and some of that, obviously would be up to the Alaska team to comment on. But the fact of the matter is that these are two networks that are very complementary. There is a very limited amount of overlap. We think the market is incredibly competitive. Lots of airlines serving Hawaii, and we expect it to be very competitive going forward. That's the nature of our business.
Last year, the holiday travel season produced a lot of delays, a lot of difficulties, and then the airline that came under pressure for that was Southwest. How do you feel like the industry is fixed up this year to meet any difficulties in weather patterns? And do you feel like Southwest is still on the back foot here, or is this something you could take advantage of?
Well, I'll just comment on our airline. We're very prepared. We make sure that we schedule within what the capabilities of our fleet and our staffing levels are, and we feel very good about how we're positioned in that regard. Our reliability has been very strong historically, and particularly over the last couple of months as we've recovered from some infrastructure challenges that plagued Honolulu Airport earlier in the year. We've been number one in on-time performance with a very low level of cancellations, and we expect to execute well in the months ahead.
Peter, just 30 seconds. Just remind us, what's the timing of this transaction with Alaska Air?
Well, the next step is for us to file a proxy statement and complete our shareholder vote, which we expect to happen in the first quarter of next year. And then after that is really up to the regulatory process and the Department of Justice to review. We'll be working on filing the information with them and responding to whatever requests. We think, given the current regulatory environment in the country, it could take 12 to 18 months to complete the entire process, but we think it could also go quicker than that.
Peter, thank you so much for joining us. We really appreciate getting a few minutes of your time. Peter Ingram, he is the CEO of Hawaiian Airlines, recently announced that Alaska Airline will be acquiring the folks at Hawaiian Airline. And probably the highlight for Peter Ingram is he is an MBA from Duke University's Fuqua School of Business. This is Bloomberg. Let's get some business news now. Lisa Mateo.
You got to call Microsoft teaming up with labor unions on what it's calling an open dialogue on AI and its impact on workers. The software giant is forming an alliance with the AFL-CIO where it will provide formal trainings on how AI works starting in the winter of next year. It'll also begin gathering feedback from labor groups with a focus on unions and workers and what it's calling key selected sectors. Right now, Microsoft shares are down about 1.5%. It's back to the bargaining table for Southwest Airlines and its flight attendants after workers rejected a tentative contract. We get more on that from Bloomberg's Gina Cervetti.
The contract would have provided an immediate 20% pay raise, 3% annual boost through 2028, and a ratification bonus. The union did not comment on any particular reason for the rejection. It did say employees would continue to work under the current contract for now.
Southwest is down just a fraction. And Starbucks says it'll work toward labor peace in 2024. The coffee company says it reached out to the union that represents many of its employees, and it will try to end the impasse over contract talks. Starbucks is up about 2%. Apple is cracking down on certain third-party apps to protect its users. Bloomberg's Kimberly Adams has that story.
Apple shut down third-party applications that enable Android devices to use the iMessage service to communicate with iPhone users. Apple says the app posed significant risks to its customers.
Apple says those risks include users' privacy and security. Users could also be exposed to phishing attacks and unwanted messages. Shares of Apple are down nearly 2%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks have kicked off the trading week on a cautious note. Little change right now on the S&P 500 index. Traders are refraining from big bets ahead of key economic data and meetings from major central banks that will test the market's optimism on rate cuts in 2024. Right now we have got the 10-year at 4.27%, with a 2-year now 4.76%. Stocks for the most part higher. S&P up 4, up by 0.1%. The Dow up 68, up 0.2%. Nasdaq 100 index up 85, up 0.5%. And the Nasdaq 100, Nasdaq Composite Index, though, is lower now by just about 26 points on the Nasdaq Composite Index, a drop there of 0.2%. Spot gold down $25 the ounce to $19.78, a decline of 1.3%. And West Texas Intermediate crude, little change now, down 60 cents the barrel, 70.61. The president and CEO of Hawaiian Airlines is optimistic that the carrier's combination with Alaska Air will pass regulatory scrutiny. Peter Ingram was interviewed moments ago right here on Bloomberg Markets.
You've got two airlines that have very complementary networks. We have, big areas of our network where we don't currently compete with Alaska. They also have huge parts of their network where we don't overlap at all. The amount of overlap is very limited, and I think when people look into that and dig into it, that's what they're going to see.
And right now we do have shares of Alaska. They are trading higher by just about 1.1%. As for Hawaiian Airlines, that stock up now by 19 cents at $13.50. Again, recapping, we are looking at an update for the S&P 500 index, up now by 4 points, a gain there of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Jennifer, Ryan, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, we got a really strong jobs report on Friday, and an unemployment rate ticked back down to 3.7%. And nowhere is it tighter to higher than in the tech space. So our next guest is going to help us understand what's happening out there. Martha Heller, CEO of Heller Search Associates. Heller Search Associates is a premier women-owned executive search firm specializing in technology, leadership, and talent for the new data economy. Martha, are your clients just calling you up and saying, what is AI and how do I hire for AI? What's going on there?
It seems like the only thing anybody wants to talk about now, Paul, is AI. And we think that bodes very well for the technology hiring market in 2024. We think the AI revolution is going to put a lot of pressure on companies to hire in cybersecurity and data science, not to mention all of those brilliant large language model developers who we are all going to need to drive our AI dreams forward. So yeah, lots of AI.
Now, one thing I'm wondering is, this seems to me like very specialized skills you need for the jobs you just described. I mean, do we have enough of these people in the United States economy? What's the outlook for all this demand to get met?
The outlook is not great, I will say, because we don't have these brilliant engineers who have such specialized knowledge. So what's going to be key to big enterprises who want to base much of their business strategy on these new AI solutions is learning how to grow their own. It's learning how to take strong athletes who've got great development backgrounds and teach them some of these AI nuanced skills, because we're not minting large language model developers out of our schools just yet.
I don't think our schools know what large language modeling is, quite frankly. They wouldn't know AI if they tripped over it. That's just because I just think, I don't know, it just came out of nowhere this year, AI. Talk to us broadly speaking about the tech market, because early this year, a lot of headline risk, I would say, coming out of Silicon Valley, tech companies announcing rare layoffs. Talk to us about the tech environment in general.
Sure. So, there were a lot of layoffs. Most of them were at the big high-tech businesses. But what's happening across the broader economy is every company, retail, insurance, financial services, transportation, you name it, they all want to get into the AI game. They all want to get into the digital technology game. So every time Meta lays somebody off, that's really good for a more traditional legacy business that's trying to create more of a culture of software engineering and AI development that mirrors some of the high-tech firms. So for our sort of middle America, big companies that we all know and well, those layoffs are a boon, because that means their ability to hire becomes that much easier. So I don't think it's that we're losing jobs. I think they're shifting from high tech to other companies that need to start acting like high tech companies.
So AI spreading across the United States from sea to sea. Where are some of the locations where you're seeing some concentrations of talent? Because from the sounds of what you just said, this is not a Silicon Valley story. It's a story about where people are hiring across the country.
Well, Jen, that's such an interesting question, because, of course, location since the pandemic has changed dramatically. So it's not even hotspots. Sure, Austin, Texas, is a hotspot for tech. Boston, Massachusetts is a hotspot for tech talent. But these days, when so many companies are letting their technology teams stay where they are and not relocate, you're really finding a nice spread across the country. The notion of hotspots and concentration starts to dissipate when we're honoring remote location work.
CISO. What is that?
Yes. That's a Chief Information Security Officer.
That's a thing.
And their role what that has become even more important, especially to boards. Are we at risk? We do not want, as a company, to have our name in the paper because of some kind of customer data breach. It is the Chief Information Security Officer, or CISO, who sits at the front lines of that. And coming back to AI, because of course everything comes back to AI, every time you put a new AI tool, a Gen AI, a Chat GPT in the hands of your employee, you are opening up the company to some risk. So those CISO roles are becoming more and more important. And in fact, the SEC has mandated that all corporate boards have cybersecurity representation on their boards. So security, every time we get a new exciting technology development, we have a new security challenge on our hands.
You mentioned, what companies are going to have to be doing in order to retrain their own employees, but it's a very tight labor market. So, is this a field that people could do some career shifting into? What are the best kind of places to move from and to into the spaces that you're looking at?
Absolutely. So we talked about CISO, we talked about LLM developers. We haven't talked yet about data science. Data scientists who make a lot of money, like $250,000 a pop,
Nice.
they are very talented in reading the data and then finding business opportunity in the data. And they can have a background in math or political science, or they could have an MBA. They come from all over. So people who are smart, lifelong learners who have a facility for math, a facility for data, can find a wonderful career in data science. You will not find the same background. If you look across 10 data scientists, they'll all have different backgrounds. So I don't know if either of you are old enough to remember The Graduate, when it was Dustin Hoffman was told that it's plastics. It's not, it's data science. Even more than AI, data science is that career that is going to allow people with more generalized skill sets, but really good critical thinking skills to move into the tech environment and hopefully solve this supply-demand challenge that you're bringing up.
Hey, Martha, if I want to hire a bunch of smart techies, can I find them? Because I used to rely a lot on some foreign-born workers, whether they're from, just outside of the U.S., and the visa requirements were pretty supportive. Then that was not the case. Where are we on that?
You can find them in the United States if you want to pay them enough, if you want to give them technology that's interesting. The challenge that companies are having right now is that they're not working on really cool, interesting technologies. Those brilliant technologists aren't interested. So if you've got budget and you've got an interesting technology roadmap, you will attract those technologists. But in terms of reaching outside of the country and also having development centers in India and other places, certainly companies are making good use of that.
One thing I'm wondering is if, apart from data scientists, are you seeing any new skills cropping up? I mean, prompt engineering was a really hot thing. Is that fading? And then, more to the point, what does this mean for wages in tech? Is this hot? They're historically been higher than other industries. Is AI going to equalize that in any way?
I don't see AI equalizing it. I hate to say it, but I see AI driving wages even higher. And what I think is ironic here is that we all think of AI as replacing human labor, right? The robots are going to take over and we won't need all these expensive people anymore. But I believe we are at 3 to 5 years away from any impact on hiring or labor that AI will have, except maybe in a little customer service. But for a while, we're going to need to hire more people to make sense of these AI solutions and then make them work in our businesses. So I see the advent of AI as pushing wages up before it pushes them down.
All right, Martha, thank you so much for joining us. Martha Heller, she is the CEO of Heller Search Associates, talking to us about the technology labor market, which is, it's always been tight. I mean, I followed all the internet companies back in the day, and their big issue, even way before the pandemic, was just attracting and retaining talent, engineering talent.
But the story always was, if you want to be in that game, you've got to move to California. And it's interesting now that you can pretty much stay right where you are. Just get online and take some new training courses, and then there you are.
That's what it seems to be the case there. Taking a look at these markets, S&P is up about 0.1%, the Dow up about 0.2%, and the NASDAQ just off slightly about 1%. Right now, let's head down to Washington, D.C. World and national news with Nancy Lyons.
Thanks, Paul. With lawmakers hoping to make it out of Washington by the end of the week, there's a full court press to approve aid for Ukraine in its war with Russia. It's part of President Biden's supplemental aid request that also includes money for Israel, Taiwan, and the southern border. But GOP lawmakers are pressing for more than just additional money for the border. They want reforms. Ukrainian President Volodymyr Zelensky is taking no chances. He's making a return trip to Washington to advocate for the additional money. Bloomberg Government's Maeve Sheehy has more from Washington.
This 11th hour meeting is going to be really important, especially because this is the last week before Congress goes home for the holidays. So if this week Ukraine aid doesn't get done, there's a pretty big chance that it won't get done at all. And this week, Zelensky will be meeting with senators. He'll be meeting with House Speaker Mike Johnson all on Tuesday. And we'll have to see if that moves the ball at all, because right now it looks like talks are pretty much stalled.
Bloomberg Government's Maeve Sheehy. The death toll in the Israel-Hamas war keeps ticking higher. According to the health ministry in Hamas-run Gaza, the death toll there is over 18,000. That includes civilians and combatants, but that has not been confirmed by U.S. officials. Today, the United Arab Emirates government flew in a dozen UN ambassadors to Egypt's border with Gaza as it continues to push for a ceasefire. The Barbenheimer phenomenon will live on in the 2024 Golden Globe Awards.
Hi, Barbie.
Hi, Ken.
Barbie leads all films with 9 nominations. Oppenheimer has 8. The Margot Robbie-led blockbuster is nominated for Best Motion Picture, Musical, or Comedy, while Oppenheimer received a nod for Best Motion Picture Drama. On the TV side, the final season of HBO's Succession earned the most nominations with 9. The 2024 Golden Globes will be held January 7th. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, they're both higher. The NASDAQ Composite Index down by 14 points, a drop there of 0.1%. Mixed picture, though, with the NASDAQ 100 Index up 98 points. That is a gain for the NASDAQ 100 now of just about 0.6%. S&P holding on to a 6-point gain, up 0.1%. Dow Jones Industrial Average up 82 right now. That is a gain of 0.2%. 10-year yield 4.27%, with the 2-year right now 4.75%. Gold down $25 the ounce, down 1.3%, $19.79. And West Texas Intermediate crude is down 0.4%, $70.97 now for a barrel of WTI. In less than 24 hours, Wall Street will be getting a sense as to whether the disinflation trend is continuing with the Consumer Price Index for November. Indeed, a busy week for economic data, specifically inflation and retail, along with a Fed rate decision. Ethan Devitt is Chief Investment Officer at Moneta Group Investment Advisors, and she was a guest right here on Bloomberg Markets.
We do expect now the next interest rate move to be downwards. When that will be is anyone's guess. It's currently looking at the second half of next year. But there's a lot of ammunition in the tank now for central banks to make that move when they want to. And that's what we think is actually gives us a lot of comfort. It was painful to watch those rises so quickly and so steeply on the way up. But now at least there is bandwidth for there to be a more relaxed approach going forwards.
And you can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. Occidental Petroleum shares are higher by 0.4%. Oxy has agreed to acquire Texas shale driller Crown Rock at a cash and stock deal valued at about $10.2 billion as consolidation heats up in North America's most prolific oil basin. After the close of trading today, we will be hearing from Oracle. Oracle shares up now by 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Jennifer, Ryan, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. Let's talk a little markets here. We can do that with Kevin Nicholson, Global Fixed Income Co-CIO at Riverfront Investment Group, based in Richmond, Virginia, one of my favorite towns anywhere. Lived there for several years. My twins were born there. All good. Love Richmond. Need to get back. Kevin, thanks for joining us here. I'm looking at my 10-year Treasury, 4.25%. And as Tom Keene would say, it was 5% just a cup of coffee ago. What happened?
Well, I tell you what, first of all, thanks for having me on today. I think that what happened was that the market started fighting the Fed. The market started believing that the Fed was going to cut rates right away. And, it built in 4 rate cuts for next year. And I don't think that this is right. I think that the market has overreacted.
I guess one question, though, I have about this market overreaction is how confident are we that inflation really is going to start coming back down?
Jennifer, no one is really confident about, inflation, to be quite honest. I don't think that there is a definitive answer out there. What we have seen is that over the last couple of months, inflation has been trending down. And, I always look at it as a race. The first part of the race is the easy part of the race because you're still fresh. It's the closing part of the race that is difficult. Inflation has come down from, over 7% down to right around 3.2%, I believe, is the last headline number. But it's going to be this latter part of the race that's going to be difficult, going from 3+ down to 2%.
So, Kevin, do you think we saw peak rates, I guess back in late October? Was that it?
I think that we've probably seen peak rates. However, I do believe that rates are going to go up from the current levels. I think that we've rallied too fast as far as yields coming down. And all of this was predicated on the fact that, on the belief that there were going to be a significant amount of rate cuts next year. And to be quite honest, when we look at our forecast for next year, we see the 10-year trading somewhere around 4.75%. And therefore, we don't see the Fed actually cutting rates. We think that they're going to be true to their word and be higher for longer. And higher for longer for us means that in 2024, we expect the Fed to just hold tight. And if they do cut, we think that it's going to be late in 2024. And we're only figuring one cut, if that.
Let me ask you a little bit more about this one cut. I mean, what's going to be the reasoning behind it? Is it going to be that inflation's under control, or is it going to be more that the economy started to show some signs of serious slowdown, maybe even a recession?
Jennifer, I think that it's going to be that the economy has started to begin to slow down. Right now, you have GDP now coming out forecasting that the fourth quarter GDP is growing at 1.2%. We just came off a period, in Q3 where it was growing at, 5.2%. So we still think that there is going to be growth in the economy, and the fact that we still see a strong labor market. But I think that over time, we're going to get to a point where the consumer is going to start to back away. We're not there yet. We're still seeing wage growth out there. And, for those that are have stayed at their jobs, they're seeing pay increases according to ADP numbers that came out last week at 5.6% annually. Those that are job changers are seeing it at 8.3% annually. And, when you have CPI at 3 plus, you're actually getting a real return, a real income. So wage. So I think that is going to propel us to continue to see this consumer spend, and that's going to ultimately push inflation up or make it harder for inflation to fall. And that's not what the market is anticipating right now.
Kevin, where do you guys, as you think about 2024, where do you see kind of the best opportunities in fixed income right now?
Well, I see the best opportunities in fixed income still being with the credit market, in investment grade corporates, and high yield in the, the triple B, high double B, up in quality names is kind of where I see the best value. At this point, I think that the Treasury market is too rich based upon the recent rally, and we need to see the rally continue in order for the mortgage market to become more robust going forward.
Let me ask you a little bit more about your point about corporate credit. I mean, there's an awful lot of debt coming due next year, and anyone looking to refinance is going to be facing a nasty sticker shock from where interest rates have gone. I mean, how is that figuring into your picture? Can companies afford that?
Yeah, I think that, for the investment grade companies, they're not necessarily going to hit that reinvestment cliff, because they tend to issue debt for longer periods of time. In the high yield space, you're going to start seeing a cliff in the maturity cliff hits in 2025. So I'm still comfortable holding short-term high yield for this next year, but I will want to start scaling out of it, as we get closer to that refinancing period coming up. For sure. So you bring up an excellent point, because I think that, and that's one of the things that we have been telling our clients is that, it's okay to own high yield right now. However, we want to start, as we get into the second half of next year, we're going to start transitioning away from it, especially as, credit spreads continue to tighten.
All right, Kevin, thank you so much for joining us. Really appreciate it. Kevin Nicholson, he's a global fixed income co-CIO at Riverfront Investment Group, located in Richmond, Virginia. He was talking about high yield. That kind of surprised me, Jennifer. I'm looking at the INGO function, Bloomberg Index Browser, and it kind of just shows you kind of the total returns year to date for across the fixed income space. The best return in the U.S. is U.S. corporate high yield, 10.1% this year. Everybody's talking about a recession. The high yield investors don't care about a recession, or they don't see a recession. I know. It is really interesting. I mean, if you look elsewhere on that list, you've got pan-European high yield and global high yield are also the big returns. Yep. So, it's a really
interesting shift from all the doom and gloom we've been hearing about fixed income.
Yeah, absolutely. All right, we're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Shares of DoorDash, they are higher. They're up about 2.5%. And this is as it gets ready to join the NASDAQ 100 before the opening bell a week from today. Bloomberg's Ed Ludlow explains the benefits of being included.
For one, prestige, right? On Bloomberg Technology, we refer to the NASDAQ 100 as kind of the proxy for the technology sector because it strips out financials. And if you extrapolate out to the NASDAQ more broadly, there's all kinds of things in there. So when you're looking at higher multiple software names and some real true tech names, it's a good place to watch. You get exposure to higher equity trading volumes, and then you're kind of surrounded by your peers.
Now, MongoDB is also set to join the NASDAQ 100. Its shares right now, they're up nearly 5%. Occidental Petroleum has agreed to buy shale driller Crown Rock in a $12 billion cash and stock deal. Bloomberg's Alexandra Semenova has the breakdown.
The company plans to finance the deal by taking on $9.1 billion of new debt and issuing about $1.7 billion in new shares. The deal is the latest in a wave of consolidations in the U.S. energy sector, and particularly in this region where Crown Rock operates. It's the most prolific oil basin in the U.S. This agreement between Oxy and Crown Rock comes as oil executives face growing pressure to keep buybacks and dividends flowing.
Now, the deal is expected to close in the first quarter of 2024. Occidental right now up about 0.4%. And Small Direct Club is shutting down. The Tooth Alignment startup is bankrupt, and the company says it will liquidate. Small Direct Club was once valued at nearly $9 billion. Shares right now, they are much lower. Those are the company stories we're following this hour. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Jennifer Ryan, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. Molly Smith joins us here in studio, which is a treat in and of itself. But that means we get to talk tennis, because I don't want to talk about the economy, which is her beat. But her real beat in my mind is global tennis, men's and women's. She knows everything. So what are we talking about now?
The Netflix Slam.
Okay, talking about the Netflix Slam. This sounds like something right up my alley.
Yeah, it is not to be confused with an actual Grand Slam. This is nowhere near the caliber of Wimbledon or the U.S. Open, but this is going to be a fun exhibition match that Netflix is putting on between Rafael Nadal and Carlos Alcaraz early in March.
All Spain.
Will be, all Spaniards. It'll be in Vegas next year. So March 3rd is the date. It's going to stream live, and they're going to announce some other tennis players and matchups later on, but two big names out of the gates for this big exhibition match.
You know, I remember when Carlos Alcaraz won the New York Open, the U.S. Open. What was this last year, wasn't it? You can tell I was living in London for 20 years. I forget what these things are all called now. But, it's the Spanish dominance of tennis. I find that fascinating. What do you make of that?
Obviously it's a history that's longer than just these two guys, but have certainly been carrying the torch for Nadal for the last 20 plus years. Crazy. This is likely 2024, he said, is going to be his last year. And just as Carlos Alcaraz has really been making his big ascent. So Spanish tennis on the men's side, that is in very good hands. For Netflix, this is more interesting, I think, on the idea of what are streaming companies trying to do about live sports. So obviously, Paul, this is right up your wheelhouse in the media
Well, Netflix
space.
has been reluctant to get into live sports primarily because they don't really need it, and it's super expensive. They do want to get in this, but this is a nice way. I think they did something with golf before the Netflix Cup, and so. But this is great. This is kind of Rafa on his kind of his going away tour, if you will, and then you got this new player Alcaraz, who is just. Everybody says, you're the expert. Tell me, hey, this is the future of tennis. You're the one that said, when I go to the U.S. Open, make sure I see this guy. Yeah, and you were right.
He's electric. I mean, there's really just, it's incredible. The guy's 20 years old and the maturity he has, on and off the court, not just in terms of the skills, but also the ability to play in front of a crowd of more than 20,000 people and know how to manage that pressure and the working the crowd, that's so part of it, and having them on your side, especially if you're playing an American. And this is turning out to be, that he's probably going to be somebody like a Nadal or a Federer in terms of he's just going to have fans everywhere he goes.
Yep.
Yeah, I mean, that's the thing I wanted to ask you. I mean, does that confidence, that aura around him, does that have legs? And it sounds like you think it does. But I mean, is there who else should we be looking at?
Just in general in the men's tour?
Yeah.
How about the Americans? We've got some Americans.
Yeah, it has been. Yeah, the Americans really finish out the season pretty strong with 4 of them in or maybe around the top 15. I'd have to look at the final rankings. But yeah, a pretty good ascent. Ben Shelton, really, I would say, was the most improved on the year. It started 2023 outside of the top 150 and closed inside the top 15.
Yep. That's
pretty crazy. So that was a huge year for him, and he's also, 20-ish years old and change. So pretty good year for Ben. Tommy Paul, Francis Tiafoe, and Taylor Fritz being the other ones in the top on the men's game there. So really impressive year for the Americans, and also the American women too, with Coco Gauff and Jess Pegula finishing inside the top 10 for singles and doubles. That is really impressive.
So, all right, next big tournament that I should focus on. I know you look at everything every week, but what should I focus on the next big tournament?
I would say the Australian Open, but obviously that is tough to do on East Coast hours. But you can.
Is that January?
It is in January.
Okay.
You can bet that I always wake up for the finals. I set my alarm for 3 a.m. Eastern. I will be there. I'm sure I'll bring it to you live here the next day. We can talk about it then.
All right. All right, that's good stuff, though. But Australia, that's the first of the Grand Slams coming up in January. We'll pay attention to that. But I'm all fired up for the U.S. Open. I love going to that first Tuesday.
Oh, we've got so much tennis to play before then.
I know. Lots of
That's
good
not
stuff
till
coming
Labor
up.
Day.
I know, exactly. That's my...
We've got the Netflix Cup before
I
then.
know, exactly. Coming from Vegas. Coming up, Sound On with Joe Matthew. That starts from Washington, D.C. right now.
from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from DC's top names.
The Republican caucus is at war with itself. Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
It's the last chance to get anything done in Washington this year. Welcome to the fastest show in politics. As lawmakers come back for their last scheduled week of 2023, all of 4 days of work without a clear path on the border or funding for Israel or Ukraine. Even as President Zelensky makes tracks to the Capitol, he'll be here tomorrow for a last-minute in-person pitch. We'll get the latest on all of this ahead from Jonathan Tamari at Bloomberg Government. Israel strikes 250 new targets across Gaza, forcing tens of thousands of Palestinians now toward the border with Egypt. A lot of questions about both sides of this conflict. We'll have insights from Hadar Susskind from Americas for Peace Now. And as Donald Trump holds a commanding lead in the latest poll in Iowa, we'll have our signature panel to weigh in on all of these stories. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. So let's get started, as always, with a look at Wall Street. For that, we go to New York, hear from Charlie Pellet.
Thank you very much, Joe Matthew. Brand new trading week, and we are looking at a mixed picture here. The Dow, the S&P, they are both higher. We do have the NASDAQ 100 index surging 107 points right now, up by about 0.6%, while the NASDAQ Composite Index is down 17, a drop there of just about 0.2%. S&P very close to session highs, up 6 points right now, a gain of 0.1%. The Dow is up 86 points now. That is a gain of just about 0.2%. 10-year yield 4.28%. The 2-year is now yielding 4.75%. We've got spot gold trading lower by $27 the ounce to $19.77, a decline there of 1.4%. West Texas Intermediate crude unchanged on the day now, $71.25 a barrel on WTI. In less than 24 hours, Wall Street will be getting a sense as to whether the disinflation trend is continuing with the Consumer Price Index for November. A very busy week for economic data, specifically retail sales and inflation, along with a Fed decision and a Jay Powell news conference. Robert Tipp is Chief Investment Strategist at PGIM Fixed Income.
I think the data that we're going to get this week is going to be largely reflective of soft landing or maybe a little bit above target inflation, but I think underlying trends for inflation are extremely favorable, if not below target on some of the key elements. And last week's jobs were firm, and I think the retail sales, there's the potential for upside surprise there given where expectations are.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Smaller social media stocks are slowly winning over analysts as the outlook for the ad industry improves. Brokers are searching beyond big names like Meta Platforms for potential beneficiaries from a recovery in the digital advertising market. Shares of Meta Platforms, they're slumping today by 2%. However, Pinterest shares, they're up by 1.6%. Snap Inc. up now by 4.6%. Again, recapping, stocks are higher with the S&P up 9 now, a gain there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, we thank you. Welcome to the Monday edition of Bloomberg Sound On. Not just any Monday. This is it, the start of the last big push, last week of the year for Congress. Unless they start adding days to the schedule, the last train leaves the station at the end of this week. And we've been talking about some pretty big stuff that needs to get done around here. Never mind funding the government with a shutdown possibly looming in January. I'm talking about Ukraine, Israel, Taiwan, and the big one, of course, the linchpin, the border. So read the headline on Jonathan Tamari's column today at Bloomberg Government. Congress's final week is equal parts acrimony and compromise. And that is where we begin with Jonathan. It's good to see you reporting for Bloomberg Government. and of course, all things Capitol Hill. Jonathan, I'm going to get to all the deal making in a moment. We've got pretty important news, though, and Volodymyr Zelensky returning to the Capitol in person. He'll be here tomorrow, not only to meet with all of the senators, which is a big enough deal, but he's going to sit down one-on-one with Speaker Mike Johnson. Does it change anything in the end, this last-minute pitch?
I mean, certainly that's what he's hoping for, but it's more a factor of whether he's changing things, but how much has changed around him in Congress. The last time he addressed Congress, there was almost universal support from both chambers, both parties, for aiding Ukraine, helping them Congress trying to do almost anything they could do to support Ukraine in their fight against Russia. And now it's much, much more divided. House Republicans in particular are very skeptical of Ukraine aid. Senate Republicans support Ukraine aid, but they want it to be attached to tougher border policies. And so I think more so than anything he might say, the issue is whether Democrats and the White House and Senate Republicans can get to a point where they agree on those border policies and it's enough for the Republicans and it's something that Democrats can swallow. That's been the big holdup, and that's what we're all watching this week.
He'll be speaking with all of the senators, at least those who attend the all-senators meeting tomorrow morning at the invitation of Chuck Schumer and Mitch McConnell. This meeting with the speaker, though, is interesting to me. He can talk to Joe Biden, Mitch McConnell, Chuck Schumer all day long. It won't really change the game here. Is this about President Zelensky speaking to Mike Johnson, or is it going to be Mike Johnson also sending a message to President Zelensky that this is not going to come as easily anymore?
Yeah, I mean, I think that point has been made very clear. I think my interpretation is that this is Zelensky trying to make one final push to the most important Republican in the House to say, listen, if we can get this aid through the Senate, trying to get those votes that he's going to need from the House to make it final, if they can get that done this week. Zelensky has always been the best advocate for his country. He's very skilled in public presentations. And so I think he's trying to close the deal that is a very difficult deal for him right now.
Well, you also can't really talk about Ukraine without mentioning Israel. The supplemental request from the White House included funding for both, along with Taiwan and the border. This has since broken down into a slightly more complex and a lot more complex situation as we approach these one by one. Jonathan Tamari, where is Israeli funding here? We're talking a lot about the border unlocking money for Ukraine, but if you ask Mike Johnson, those are separate bills that would come to the floor at different times, right?
Yes, that is his plan. And in fact, the House has passed aid to Israel on its own already a couple weeks ago now. The thing is that was attached to big cuts to the IRS, which Democrats say is a non-starter. And Democrats want to pair all these things together. They say they're all in our national security interest and that the Senate is not going to move any of these individually. The House would disagree with that. I think the fact Democrats certainly want to keep Israel aid in the package as something of a sweetener for those Republicans, even if they're not maybe fully satisfied with the border provisions, if any get agreed to, that Israel can be something that still draws some Republican votes along.
Well, there you have it then. It's Monday. Will any of this get done by the end of the week, Jonathan?
I think that is the $1 million question that we're all watching for. I think it's a big challenge for the people who support Ukraine. Trying to tie this up with border funding, it's a big lift. Immigration has been, one of the toughest issues in Congress for decades, and they're trying to close a deal here in a matter of days. The only thing I would say is that I think with bipartisan support for Ukraine, bipartisan support for Israel, there is potentially room for everybody to get something that they want and to get this over the line. But I think it's going to be a tough lift. I would say the odds are against it, but I would not say it's impossible at this point.
Holding out hope with Jonathan Tamari. Thank you, Jonathan. I know you've got a busy week ahead reporting for Bloomberg Government with us here to get things started on Bloomberg Sound On. I'm Joe Matthew in Washington. As we turn to the situation in Israel now, the IDF pushing further into southern Gaza, 250 airstrikes, or certainly 250 targets from the air, pushing now thousands of Palestinians toward the border with Egypt, and questions now about where this is going to go. As we hear from the EU's top diplomat Joseph Borrell, who says the situation in Gaza is catastrophic, apocalyptic, with destruction proportionally even greater, he says, than that which Germany experienced in World War II, reporting by AFP. As we add the voice now of Hadar Susskind, the president and CEO of Americans for Peace Now. He spent time in the IDF as Sergeant First Class, and we've been looking forward to the conversation for some time, Hadar, since you were with us a couple of weeks ago. Thank you for coming back. I wonder your reaction to what we're hearing now from the EU's top diplomat versus Israel's goal to eliminate Hamas.
Thanks, Joe. I'm happy to be back here with you today. Look, there's no question that the situation in Gaza is catastrophic. We've all seen the pictures. We've all seen the videos. The question is, what can be done? And you stated Israel's goal of eliminating Hamas. In Israel, there's an incredibly vibrant argument, and we're seeing it here in Washington too, about whether that's even a real achievable goal. And, certainly everyone agrees Israel has the right to defend itself. Israel needed to respond to the atrocities that Hamas committed on October 7th. But that doesn't answer the question of what are the actual goals of this campaign? What are they trying to achieve? And, can it be done in any way that brings this conflict to a close sometime soon?
Well, I'll tell you, the fierce fighting comes with news from the IDF that Hamas is beginning to buckle, as I read in the Washington Post, under the onslaught. Do we need then, as we talk about funding with strings attached to international humanitarian law and so forth, should the funding simply be attached to an end game, an exit strategy here, and basically how we define eliminating Hamas? Because there are many who argue that these strikes, the attacks by Israel against Gaza, is creating a whole new generation of Hamas fighters.
Yeah, again, Hamas is an institution, and it's also an idea. And I, stand firmly with the people of Israel that Hamas cannot be left in power in Gaza in a capacity to perpetrate future events like what they did on October 7th. Everybody agrees on that. But to say you're going to eliminate Hamas, I don't think anyone thinks is feasible. And so the Israeli government needs to determine what that goal is. They need to be clear and specific about real, achievable military goals. And, on the question of aid, whether you're talking about the supplemental or aid to Israel overall, I support aid to Israel, but I think like all of our aid to every country, it should support U.S. policy priorities and American values. And I think that's the debate right now around conditioning aid, is making sure that the military aid that we give to Israel, and it is all military aid, that it does support those U.S. policies and values.
I was struck by our conversation last time by the way in which you saw both sides of this story. Certainly as a former member of the IDF, gives you some sympathy, some empathy for those troops who are going into very dangerous areas in Gaza. And that's been the impetus in many cases, to strike from a distance, to strike from the air. Would you tell Israel to send more boots on the ground, to be more precise?
Look, I am not the head of the IDF or a military strategist. Like you said, I do have some of that experience. It's a really difficult balance. It is the job of the Israeli military to try to keep its soldiers and its civilians safe. And obviously, bombing long distance is safer than sending troops into the ground, on the ground. But it's also evident that you can't achieve all of the goals, including what I think should be the top goal of this Israeli campaign, which is the return of the remaining hostages, cannot be achieved through bombing, cannot be achieved through, long distance attacks. You need to have troops on the ground if your effort is going to be to militarily rescue them, as they have tried. What's been successful, of course, was when there was a ceasefire and an agreement to release the hostages.
That brings us to the potential for another truce. And I wonder where your thoughts are, because time is not going to help heal wounds here. There are more aggravated feelings and emotions on both sides of the line here. Do you think that was all we're going to get, or could you see another week or two come out of this, knowing that Hamas has its own reasons to seek a truce so it can regroup?
look, it can't be all we're going to get, right? At some point, this war, this specific campaign is going to come to an end. And when it does, there'll still be Israelis there, and there'll still be Palestinians there, and they're going to have to figure out how to live, if not together, then in proximity in a better way. And so there's the current hot button issues. There's, again, as you said, the incredible humanitarian crisis that's taking place in Gaza right now. The death numbers keep climbing, not only from bombing, but now we're talking about deaths from disease, deaths from hunger, from lack of sanitation. So there's a huge crisis there that needs to be addressed imminently. And of course, there are still the hostages there. And there's still rockets flying from Hamas as well. It's not only Israel who's bombing. So, whether we're going to see that this week or next week or the next or the one after that, I don't know. I hope it is as soon as possible. I would like to see, if what we can get is a temporary halt to release those hostages, to allow more aid in, I think that would be a positive step. But it's only that, a step. Ultimately, there needs to be a ceasefire. There needs to be an end to this round of the conflict. And I hope that when we achieve that, when we get to that moment, it means the hostages have been released, and it means that people in Gaza can start rebuilding their lives as well.
Hadar, I'm glad you could come back to talk to us. Hadar Susskind, President, CEO, Americans for Peace Now, former Sergeant First Class in the Israeli Defense Forces. Good to have your insights today as we assemble our panel. Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors, and we'll have time for everyone to be able to weigh in on this. When it comes to Israel, Jeannie, after what you just heard from Hadar, it's pretty difficult to come to consensus in a conversation like this with such a complex set of situations here on both sides. What's the view of Joe Biden when we hear about 250 more strikes overnight? Is any of the message from the White House being heard in Tel Aviv?
It doesn't feel like it's being heard, and it's got to be deeply concerning. Look at the step we took just the other day on the UN resolution. The Biden administration is going to have to really think about this passive strategy that they've adopted. To the point of your previous conversation, the reality is our funding has to be conditioned on what is in the best interests of U.S. policy, what is within the international law, and of course, the fact that Israel seems not to be listening is problematic.
All right, we'll have more time on this, as I mentioned, with Jeannie and Rick. Also, the matter of Ukraine, with President Zelensky visiting Washington again this week. We'll see what happens to the debate on both, and we'll air it out here next. I'm Joe Matthew. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg, and we do have the NASDAQ Composite Index now back in the green, and trading at the best level of the day, up 9 points right now on the NASDAQ Composite Index, a gain now of 0.1%, but the NASDAQ 100 Index is up 123 points now, higher by 0.8%. S&P up 13, gain there of 0.3%, while the Dow Jones Industrial Average is up 137 points. That is a gain of just about 0.4%, as the broader market builds on last week's gains, 6 weekly gains in a row for the S&P 500 index. A lot of economic data this week. Wall Street awaiting new numbers on both inflation, retail sales, and of course the Fed meeting on Wednesday. Goldman Sachs Group's asset management arm is reshuffling senior executives in its $110 billion private credit unit as it seeks to double the size of the business in the medium term. That, according to its global head of asset and wealth management. Goldman Sachs shares are up now by 0.6%. 10-year yield 4.26%, with a 2-year that's now yielding 4.74%. Gold is slumping $27 the ounce. The precious metal now trading at $19.77 the ounce, just about down by 1.7%. Bitcoin down 6.7%. Right now we've got Bitcoin at 40,833 on Bitcoin, while West Texas Intermediate crude is up 0.5%, 71.57 a barrel. So again, recapping, we do have stocks higher. S&P up 12, gain there of 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
President Zelensky will be meeting tomorrow with senators, with the new Speaker of the House, and with President Biden, but he is already here today. The delegation from Ukraine is in the Capitol. In fact, he appeared alongside Lloyd Austin, Secretary of Defense. President Zelensky speaking earlier to the National Defense University. The real high-stakes day, though, is tomorrow, as he finally gets in front of some of the very lawmakers who have been doubtful over the effort to continue funding Ukraine. Let's reassemble our panel. We have a lot to talk about today with Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. We'll get back to the matter of Israel in a moment. Rick, this latest visit by President Zelensky comes thanks to an invite from not only the White House, but the leadership in the Senate. What happens when he gets in a room with the Speaker of the House? That's the real business at hand here. When he looks eye to eye with Mike Johnson, what should be the message?
Well, I think, first of all, the atmospheric says he's coming off of a very bad week. The collapse of his visit last week, or at least the visit virtually to the private briefing. The briefing itself collapsed due to the fact that there was no new information being imparted. You can try the senator's time all you want, but if you ask them to go to a meeting where they don't learn anything, they're going to be pretty grumpy. And that's what you had at the end of last week, a real negative turn. So he's got to overcome that. He's got to build a relationship with the new speaker. He really doesn't have one, certainly not since Johnson's been elected speaker. And he has to do it all in the context of trying to get something done in literally 1 week in order to try and preserve the funding that he needs to go into to extend the war into New Year. So it's a monumental task, and frankly one that I think all the cards are stacked against his success, which may actually be the blessing in disguise, because at this stage, just being able to build that relationship with Johnson might be enough to preserve an option for next year funding.
Well, of course, we're not talking about Ukraine funding or apparently Israel funding without a deal on the border. And I want to get both of your takes on this, because we heard from both the lead negotiators, the Democratic Republican Party. They both did the Sunday shows, although we heard from James Lankford, the Republican, of course, the senator here who's leading negotiations, just outside the Capitol on the steps. He's coming into work today, and he was on CNN. And I want you to listen to how close, actually, what Lankford and Chris Murphy, the Democrat, are saying here. Here's James Lankford with CNN.
We've got a narrow majority in the House. We're in a minority in the Senate, and we don't have the White House on it. I mean, we don't have the pole position to be able to resolve this. We're not going to be able to resolve every area dealing with border security. But based on right now what's happening along the border, we shouldn't just ignore it.
Okay, we're not going to be able to resolve every area with regard to the border. That's the Republican lead of negotiations. Here's the Democrat on Meet the Press, Chris Murphy of Connecticut.
Ukraine is running out of ammunition, and if we don't solve this in the next few weeks, Vladimir Putin is going to have an opening to march through the Ukrainian lines to make a move on Kyiv, threatening all of Europe. So this has to be resolved right now, which is why Republicans have to be reasonable. We are not going to solve the entire problem of immigration between now and the end of the year, but we can make a down payment.
Again, we're not going to solve the entire problem of immigration. Jeannie, it was almost word for word. Does that make you feel like we're getting more realistic about a compromise here? We might get something done?
Yeah, I mean, I think they both indicated over the weekend that progress was being made, definitely better than they were the weekend before. One big concern in my mind was hearing Chris Murphy over the weekend saying the White House is going to get more engaged. It would seem to me, given the timing, that their height of engagement would have been like 3 years ago. So the idea that we're waiting for the last minute for them to come in a heightened engagement is a bit troubling to me, because time is certainly not on our side. But, you know, on the opposite side, we did hear the president last week say that the White House was engaged. So getting some mixed signals on that is a little bit troubling. But, you know, the reality is this was always the downside of tying all these together, was if one thing goes down, everything crumbles. So, you know, we've got to hope they can keep all these balls in the air and keep this moving forward. And I think that the White House really has to jump on this, what I see as a gift by Republicans. The immigration issue is a loser for Democrats. They should be jumping on this, get a deal, and claim success as soon as possible. I know that's easier said than done, but I think Biden's got to be out there pushing for a deal of any kind, even incremental, on immigration.
Rick, you just heard Lankford and Murphy speaking about this. Dick Durbin, the #2 Democrat in the Senate, had an interview from Guatemala. He was down there over the weekend looking into this issue, and he spoke with Punchbowl. Quote, "We cannot ignore the reality of the numbers and where they're coming from. We did not design the border policies for the volume of this nature," unquote. You're hearing Democrats, it sure sounds to me, Rick, indicate that they are ready to make a deal. Are we closer than we were a week ago?
Yeah, I think we're closer. I mean, you know, everybody was talking about a week before last, the death of these negotiations. Oh, my God, they left. And, you know, they didn't finish anything. And they're still talking. And as you portrayed, it sounds like they're saying exactly the same thing. I would say a little different than Jeannie's take. I think Biden should get involved, but he needs to talk to his Democrats. They're the ones who are saying no to a deal that Lankford's got on the table. And so if Biden's smart, he's making sure that the Democrats in the Senate aren't being too tough in their negotiation. He needs a deal, no matter what that deal is, and he needs it worse than they do. And so I think that could be a positive to actually get a deal done. He's not going to have any influence with Republicans, but he could have an impact with Democrats who might be standing in the way of a border deal.
Interesting numbers here on funding for Ukraine. And to your point, Jeannie, this could be a gift for Joe Biden. It could be a gift in more ways than one. You take the border off the table in a campaign year, and you overcome, apparently, pretty real opposition here, or at least real skepticism over funding for Ukraine. Half of registered voters. This is a University of Michigan Ross School of Business poll. They did it with the Financial Times. 48% say the U.S. is spending too much on aid for Ukraine. That's overall. 65% of Republicans say too much, compared with 52% of independents and 32% of Democrats. This is clearly an independent and Republican concern, Jeannie. So is this two gifts the Republican Congress could give Joe Biden?
It is, but those numbers are so important because they underscore what Franklin Roosevelt told all leaders. You have to educate the public. When you are sending millions and billions of dollars somewhere else of people's hard-earned money and they are suffering at home, you have an obligation to educate them on why it's in our interest to do that. And that is what needs to happen. It would be a disaster for the U.S., from almost every perspective, to walk away from Ukraine right now. And that is got to be said over and over. You can't say it enough. Otherwise, the numbers that you just read will continue. And if Congress did support the funding, there would be questions, and it would not look good for President Biden come 2024 when people go to the polls. So educate's got to happen here.
Rick, we've got a minute to the news. I just want to give you a chance to weigh in on the conversation that we were having earlier on the situation in Israel. To what extent is the Biden administration, do you think, or should be, helping to call shots, helping to actually influence military strategy right now in Israel as it conducts its raids in Gaza?
Well, I think that they are actively trying to weigh in on the death of civilians, right? There's nothing in it for the United States to use our money and weaponry to kill a lot of civilians in harm's way. There's no question there are collateral damage to this offensive by Israel. And we've been, I think, a positive force in trying to find ways for the Israelis to avoid those clashes. That being said, Israel has their battle plan. It's their battle plan, and they're going to execute it as they see fit. And even though we are a reliable and important ally to them, I think they'll listen, but we can't dictate terms to them.
We've got our signature panel in place. Rick Davis and Jeannie Shanzano. We're going to hit the campaign trail next with a lot to talk about. I'll tell you, the latest poll from Ann Selzer shows Donald Trump commanding the situation in Iowa, even as he flirts with this idea of being a dictator for a day. It's coming up next after we check world and national news. For that, we turn to Scott Carr in the Bloomberg 99.1 newsroom in Washington. Hi, Scott.
Thanks, Joe. Hi. Special counsel at the Department of Justice, Jack Smith, is asking the Supreme Court to decide in its current term whether former President Donald Trump is entitled to absolute presidential immunity against criminal charges over his efforts to overturn the 2020 presidential election. In a filing with the High Court today, Smith asked the justices to consider directly reviewing a federal trial judge's refusal to toss out the indictment against Trump. Smith says he's also asking a federal appeals court to expedite its handling of Trump's appeal of that ruling. President Joe Biden will host a meeting with Ukrainian President Volodymyr Zelensky at the White House tomorrow. National Security Council spokesman John Kirby says it comes as Russian forces ramp up their attacks on civilian infrastructure in Ukraine and at a critical moment in negotiations regarding aid to Ukraine.
It's a chance for the president to get an update from President Zelensky about how things are going, but also to make it very clear to President Zelensky and the Ukrainian people that we're going to continue to support them.
The Biden administration wants Congress to pass its more than $100 billion package for Ukraine, Israel, and other programs related to national security. Many Republicans in Congress have said they'll only support the package if it also includes significant U.S. border policy changes. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks have kicked off the new trading week on a cautious note. Traders are refraining from big bets ahead of key economic data and meetings from major central banks that will test the market's optimism on rate cuts in 2024. S&P up 12 now. That is a gain of 0.4%. We've got the Dow Jones Industrial Average up 130 points, up now by 0.4%. The Nasdaq 100 index is up 124 points, up 0.8%, while the Nasdaq Composite Index is up 10, a gain there of just about 0.1%. 10-year yield 4.25%, with a 2-year that is yielding 4.73%. Spot gold down $24 the ounce to $19.80, a decline of 1.3%, and West Texas Intermediate crude oil up 0.4% right now, $71.55 a barrel. Cannot ignore what is happening with Bitcoin today. Bitcoin now down by 6.6%, just above 40,000 at 40,913. Fed officials meet this week on rates, which are at a 22-year high. And with more, here's Bloomberg's Vinny Del Giudice.
Economists say the Fed's policy panel will probably wrap up the year quietly, leaving the benchmark U.S. lending rate just where it is, 5.25% to 5.5%. The strength in this past Friday's employment report seems to imply rate cuts aren't imminent. Inflation also remains above the Fed's target, but it is moderating. Fed Chair Jerome Powell could liven things up at his regular news conference following Wednesday's policy statement. Vinny Del Giudice, Bloomberg Radio.
And of course, as is the custom over several decades, we will have that news conference for you live here on Bloomberg Radio, 2:30 p.m. Wall Street time, 30 minutes after the actual decision. Sources tell Bloomberg Bank of America has promoted 334 of its employees to managing director, 8% fewer than last year's total. The sources say more than half of those elevated to the senior role are women or people of color, marking the fourth consecutive year that historically underrepresented groups made up the majority of the class. Shares of Bank of America today, they are trading lower, little change, down by about 0.1%. Oracle after the close of trading today, Oracle up now by 1.3%. Recapping, S&P up 13, up 0.3. That's a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
35 days to Iowa. Just let that wash over you as you pack the parka. We're almost there, which means this latest poll from Ann Selzer is all the more meaningful. NBC News, Des Moines Register. This is the big one. This is the one the veterans follow, with a commanding lead for Donald Trump. I know the whole story lately has been Nikki Haley surging, but you cannot argue with these numbers. 51% Donald Trump in Iowa, the biggest lead ever recorded at this point in a competitive Republican caucus in the history of the Hawkeye State Survey. So what's that doing for you? DeSantis is at 19, second place. Nikki Haley, 16. May as well do the whole debate stage. Vivek at 5, Christie 4. We reassembled a panel with Rick Davis and Jeannie Shanzano. Rick, Donald Trump is going to win the caucus, isn't he?
Yeah, it sure looks like it. And Seltzer has a pretty good track record for picking winners and losers in Iowa. And in this case, it's not even much of a guess. The fact that Donald Trump was able to actually improve on a otherwise massive lead at a time that was really critical for Ron DeSantis and or Nikki Haley to show some strength is really quite phenomenal. Obviously, all of it is a ground game. It's all about organization, turning people out on cold, January nights. But at the end of the day, when you have this big a group to pick from, a big enough group who really wants to see Donald Trump as the winner in Iowa, it's awful hard to see that not coming to fruition.
Yeah. What do you make of this, Jeannie? If Donald Trump wins Iowa convincingly, does it matter if Nikki Haley does pretty well in New Hampshire? What's that next week going to feel like?
Yeah, and I think we already hear Nikki Haley starting to say, you know, we have to do well in Iowa. We have to move into New Hampshire. I think she is reading the tea leaves. But the reality is, I think that if anybody is discouraged by this poll, you know, putting Biden aside, it's got to be Ron DeSantis. I mean, $200 million, key endorsements, 99 counties, and this is where he finds himself, even an okay debate and a public debate with Newsom on Fox. Ron DeSantis should step out of this race. And I think it gives us all insight into the strategy that went wrong. If you're going to take on the king, you're going to have to hit him. They didn't hit Donald Trump at all. They thought they had to be nice to him to get his supporters. That's not the case. And Nikki Haley should, at the very least, learn from that as she moves forward into New Hampshire, presuming that she stays in, which I assume she will.
I have to ask you both about the latest appearance of AI in the campaign. And this is a Donald Trump ad that uses artificial intelligence to basically put words in the mouth of an MSNBC reporter talking about, and not very nice things, about the other Republican candidates, as if he's reviewing the debate the other night. He talks about Ron DeSantis's heels, for instance. Now, NBC News is demanding that this ad be brought down. Trump's senior advisor, Chris LaCivita, who actually posted this to begin with, writes, to keep NBC News lawyers off my butt, he didn't use that word, please note this is a parody. When we start talking about AI-generated fake videos here in deep fakes, Rick, does parody play any role in that? Or does this need to come down?
Yeah, you know, I like Chris LaCivita. I think he's added a lot of campaign discipline to the Trump organization. But this is a step too far. I mean, like, this is exactly what everybody was warning about. They had a lead NBC broadcaster talking about the debate, and they completely fabricated him speaking about various candidates. And of course, when LaCivita then apologized for it or said, oh, I got to cover my rear in order to have the lawyers happy, he did it in a separate tweet. So it wasn't even responding to his initial tweet. I mean, like, too cute by half campaign. Chris, you ought to take it down. You made your impact. Everyone's talking about it today. But this is, if we don't stop these things now, the parodies will come into the truth sooner than you think.
It's a pretty fine line, a pretty gray line already, Jeannie. I mean, sure, you take it down, but is that the game we play here? You get it up for a day, you get the cease and desist, you pull the ad down, but everybody talked about it, everybody heard it, and it still left its mark.
That's right. And it'll still obviously be accessible to anybody who recorded it and puts it out. It's a real problem. This is the tip of the iceberg. Imagine, you know, we're talking presidential campaigns. Imagine you get down to the state and local level and these things are flying around and, you know, who knows what the truth is. The court is going to have to step in at some point sooner rather than later and make a decision as to if we can run democratic elections with this stuff out there. And the answer is we cannot. We as voters need solid, truthful information to make sound decisions. And if we are going to say that with parity, we will, you know, this is excused, it really should not be in this case. This is terribly important to our future.
All this as Donald Trump tries to normalize the dictator thing. He held a speech in New York over the weekend. Remember, he told Sean Hannity, sure, I'd like to be dictator just on day one. He brought it up from some of the pushback that he heard over the course of the week just last night.
Baker today in the New York Times, he said that I want to be a dictator. I didn't say that. I said I want to be a dictator for one day. But the New York Times said, and you know why I wanted to be a dictator? Because I want a wall, right? I want a wall, and I want to drill, drill, drill.
That's all he meant, Rick, just a wall and a drill. But I thought he built the wall.
I thought he built the wall, and I thought Mexico paid for it. Obviously, I was wrong. But everyone's talking about him being a dictator, and I guess that's what he wants.
Yeah, and apparently that's not going to stop him from winning the Iowa caucuses. This is remarkable. Mitt Romney called him a human gumball machine on Meet the Press. The thought comes into the head, comes right out the mouth. Final thoughts from our panel next. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. According to a study published today in the Journal of the American Medical Association, taking Zepbound for 36 weeks resulted in a 20.9% loss of body weight. But after 88 weeks, a group no longer taking the drug after the first 8 months had still lost almost 10% of their weight. Those who stayed on the drug the entire time lost an average of 25.3%. Now, Eli Lilly had revealed some of the results of the study in July, but this is the first time the full details have been published. Lilly right now down 3.7%. Boeing has named Stephanie Pope as Chief Operating Officer, elevating a company vet into the highest management sphere. And with more on the story, here's Bloomberg's Tom Busby.
Charlie, Pope has worked at Boeing for almost 3 decades. Previously, she oversaw the company's global services division, a post she assumed just early last year. Now, prior to that, she was Chief Financial Officer for Boeing Commercial Airplanes. As head of operations, that's a new position that Boeing is creating. Pope will oversee the performance of the 3 business units with responsibility for driving supply chain, quality, manufacturing, and engineering excellence. Boeing has emerged from several tumultuous years following the grounding of its mainstay 737 MAX model, then the pandemic that disabled air traffic around the world and disrupted supply lines. Charlie?
And that's Tom Busby reporting. We do have Boeing shares up now by 1.1%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington, where we'll add Kaylee Lines to the conversation in just 5 minutes and some final thoughts ahead from Rick and Jeannie. First, let's check world and national news for you. Scott Carr has that in the Bloomberg 99.1 newsroom in Washington. Hi, Scott.
Hey, Joe. The special counsel prosecuting former President Donald Trump wants the Supreme Court to immediately decide Trump's immunity claim. Jack Smith is skipping a federal appeals court and is going directly to the high court to determine whether or not Donald Trump is immune from prosecution for alleged crimes he may have committed while in office. Smith is pushing to get the trial started March 4th, before the presidential election. Trump's legal team argues the case should be tossed because he has presidential immunity from Smith's indictment, which accuses him of entering multiple criminal conspiracies to overturn the results of the 2020 election. President Biden is in Philadelphia this afternoon, where he's announced federal funding that will go toward the reopening of 3 fire companies in the city, Engine 6, Ladder 1, and Ladder 11, that were forced to close during the so-called Great Recession. The White House says funding was made available last year for Philly to receive a $22.4 million SAFER grant award. That money will cover 72 firefighter salaries and benefits for 3 years. Barbie's favorite color may be pink, but today she's churning out more Hollywood gold for Warner Brothers Pictures anyway. Here's Bloomberg's Karen Moscow.
Greta Gerwig's Barbie dominated the Golden Globe Awards nominations with 9 nods for the blockbuster film. The nominations included Best Picture, Musical, or Comedy, as well as acting nominations for Margot Robbie and Ryan Gosling, and 3 of its original songs, including... Barbie was closely followed by Oppenheimer, which scored 8 nominations, including Best Picture Drama. The television categories were dominated by Succession and FX's The Bear, and the winners will be announced January 7th. Karen Moscow, Bloomberg Radio.
President Biden will be hosting a meeting with Ukrainian President Volodymyr Zelensky at the White House tomorrow. The Biden administration wants Congress to pass its more than $100 billion package for Ukraine, Israel, and other programs related to national security. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr. Back to you, Joe.
Hey, Scott, thank you. Maybe Twitter Spaces is just not the right place to be delivering messages for presidential candidates. Remember the DeSantis event with Elon Musk, who was full of feedback and echoing and weirdness. Last evening, Elon Musk held another one of these to talk about world issues with the likes of Alex Jones, just reinstated to Twitter. You heard that over the weekend. As well as Vivek Ramaswamy, who was weighing in, I guess at one point, before he decided to relieve himself. Now, this is from the "if you made it up, no one would believe it" file. This is not a Naked Gun movie. This actually happened. The quality's not great, but let's get you into this Twitter Spaces event as they realize that Vivek, he kept his mic on.
Super pro-human, and I mean all.
This is Elon Musk talking first.
Humans in America, humans in
somebody's got their thing open
and everywhere else.
Their phone open in the bathroom.
Yeah, that's Vivek. That's your phone, Vivek. I'm not able to mute you. Vivek. Perfect. Go ahead, Elon.
He muted.
Sorry about that.
So, well, I hope you feel better.
I feel great. Thank you.
Yeah, feels great. Rick, when you're preparing candidates to go online, is not bringing a hot mic in the bathroom at the top of the list?
Yeah, you know what? I wouldn't even have thought to suggested that bringing a hot mic into the bathroom was a bad idea. So, yeah, and that's pretty basic.
Okay. So this is going on the list. Jeannie, what do you make of this? Is this, I mean, who knows? Did he do it on purpose? Is this how the Ramaswamy campaign comes to an end?
Yeah, we should all hope. And the reality is that I'm just praying that is also a fake clip of the kind that Trump did with MSNBC, but I fear it's not.
Yeah, I'm not sure any AI was involved in that bathroom break, Jeannie. We'll let you know if we find out. Thanks for humoring me as usual, Jeannie Shanzano and Rick Davis. This stuff happens, and we bring it to you. What a way to make a living. Kaylee's coming in next. The Monday edition, Hour 2, starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself. Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Congress has 4 days to solve all of the world's problems. Welcome to Hour 2 of Sound On as lawmakers stare down a list of items here, from Israel to Ukraine, from FISA to the border, with plane tickets home at the end of the week. What could go wrong? We'll get the state of play from Jack Fitzpatrick at Bloomberg Government, and we'll share insights with Mick Mulvaney, co-founder of the Freedom Caucus, former acting chief of staff in the Trump White House, back for his weekly conversation here on Bloomberg. Donald Trump holding a commanding lead with 35 days to go in Iowa, and new calls for the presidents of Harvard and MIT to resign after the president of UPenn did the same. We'll get to all of these stories after we check Wall Street. Markets now. We bring you up to date from New York with Charlie Pellet.
I thank you very much, Joe Matthew. We do have stocks just about at the best level of the day right now. A 14-point gain in the S&P 500 index, up by about 0.3%. Just getting word that economists at Goldman Sachs now see the Fed starting to cut rates in the third quarter of next year, accelerating their expectations of monetary easing in response to fading inflationary pressures. The team, led by Jan Hatzius, had previously forecast the fourth quarter of 2024. Right now, we've got the 10-year at 4.24%, the 2-year 4.73%, S&P up 14, up 0.3, the Dow up 130, now up by about 0.4%, while the Nasdaq Composite Index is up 23, up by about 0.2%. Spot gold down $22 the ounce to $19.82. That is a drop now of 1.1%. Crude is pushing higher, up 0.6%, $71.66 a barrel. And Bitcoin now down 6.4%, 40,090 on Bitcoin. Dow, S&P, Nasdaq all advancing. What about the market backdrop? Morgan Stanley chief equity strategist Mike Wilson says company earnings are likely to weaken in the fourth quarter before a rebound in 2024. Again, stocks are trading higher. One deal to tell you about: Occidental Petroleum has agreed to acquire Texas shale driller Crown Rock in a cash and stock deal valued at about $10.2 billion as consolidation heats up in North America's most prolific oil basin. Again, recapping, stocks higher, S&P now up by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie, thank you, and welcome to Hour 2 of Bloomberg Sound On. We're back to Washington now. Kaylee Lyons at my side as we drive forward here on the fastest show in politics. I just don't know where we're driving.
Yeah.
We've been, like, winding up to this week for weeks. We added a border deal. We added a laddered CR. We've got all kinds of stuff flying around here. No one has a path on anything, apparently. But maybe that's just when news breaks, Kaylee. I'm holding out hope.
Well, I guess you can't rule it out, right? Something could always happen in the next couple days before they head home for the holidays, assuming that they do, as scheduled, head home at the end of this week, even if they haven't gotten much on the to-do list done before doing so.
That's right. We're going to talk to Mick Mulvaney in just a moment. I'm going to guess that, he's probably listening to us right now, and he thinks we're sounding pretty downbeat. I know Mick will lift our spirits.
Will he?
If Jack Fitzpatrick does not. From Bloomberg Government. Jack, good to see you. This is your time. This is like Christmas morning for someone who covers appropriations. But will there be appropriations to cover? And are we really going home this week, or do lawmakers get a letter in a couple days saying, and you're going to work through the weekend?
I don't know when the holidays start, especially for the Senate. You've had this letter that came out last week from the White House saying your deadline to get a deal for Ukraine funding, which is locked up with these border talks, is the end of the calendar year. They're scheduled to leave December 15th. I'd be a little surprised if they left early, if they left on December 15th without a deal for Ukraine, having been told by the White House, we absolutely need something this year. Yeah. And it does not, even if today is a good day, tomorrow is a good day in negotiations, it doesn't sound like they could actually pass something through both chambers, even if there was a handshake deal now.
Well, that's what I was going to say, Jack. It's one thing if the Senate agrees and can get it done. It then has to go to the House and be voted on by enough House Republicans, who are, many of whom are very resistant to the idea of further Ukraine aid and would only like to see H.R. 2, essentially, when it comes to border policy. So the reconciliation is difficult to see here.
Yeah, the tougher part, I think, is the border measures and the pressure that it could put on House Republican leadership. They've been pushed to say, we want all of H.R. 2. Even if there are concessions there, you could get Democratic votes in a bipartisan deal that's going to get through the Senate. You can count on anything requiring Democratic support. So you don't need to get 218 votes from Republicans. But the key question in the House is, how much pressure does the Freedom Caucus put on Mike Johnson, the new speaker? Does it get to the point where his stance as the leader of the conference is shakier if he doesn't get a really good deal on border measures? And that's the really tough stuff. There's still plenty of Republicans who are supportive of Ukraine, but it's the quid pro quo that makes it complicated.
The commentary that we're hearing, though, from both Chris Murphy and James Lankford, it's kind of amazing. We cooked it down in the last hour. They're using word for word language that makes you wonder if maybe they're closer than it appears. I'll walk you through it. This is James Lankford just a short time ago on CNN. Monteraj, got him as he was coming up the stairs.
We've got a narrow majority in the House. We're in a minority in the Senate, and we don't have the White House on it. I mean, we don't have the pole position to be able to resolve this. We're not going to be able to resolve every area dealing with border security. But based on
we're not going to be able to resolve every area.
If we don't solve this in the next few weeks,
here's Chris Murphy.
Vladimir Putin is going to have an opening to march through the Ukrainian lines to make a move on Kyiv, threatening all of Europe. So this has to be resolved right now, which is why Republicans have to be reasonable. We're not going to solve the entire problem of immigration between now and the end of the year, but we can make a down payment.
They're basically saying the same thing. So are we going to get some form of immigration light here? We're not going to solve the entire problem, but here's what we've got.
That is the focus. There's a lot of it. There's a real reality check from Senate Republicans, even with regard to House Republicans' expectations. House Republicans are saying we want everything that we passed in our partisan bill on the border. You heard James Lankford. You may have heard last week Tom Tillis say they'll get what we send them. But it's still very difficult to get a deal in the Senate. The proposals that have been put forward, according to Chris Murphy, from Republicans are ones that would not get any Democratic support, let alone enough to get 60 votes in the Senate. And you do still have that political pressure on Mike Johnson. There could be a difference between the House Republican stance and the Senate Republican stance that makes it difficult to get something through.
All right, I would say Jack sounded pretty downbeat there as well.
Not
Joe.
Not really optimistic.
Yeah, not upbeat, that's for sure. Right. Jack Fitzpatrick of Bloomberg Government, thank you so much
Jack
as
plays
always.
it straight, though. I'm not going to wait for Jack
beat.
to. Absolutely
Neutral
right.
beat,
That's
perhaps. Good. Should we get the beat from Mick Mulvaney? Of course, a former congressman.
Yeah, it better not be neutral. I'm
himself.
pretty sure it won't be.
As our listeners know, we talk to him every Monday and we give the whole list of the resume. Mick, I'll skip that. Are we too downbeat or are we appropriately downbeat? What's your take here?
I think you're appropriately downbeat. And keep in mind, and everybody knows this now, that Washington is not going by any of the typical playbooks, right? So anybody says, oh, yeah, this is how it's going to happen, this is how it's going to happen, this is how it's going to happen, just isn't paying attention because we're sort of off the rails when it comes to how Washington is functioning. So the best I think I can do, Kaylee, is give you some additional data points, right? Number one, the whole idea behind this laddered CR, at least one of the ideas behind the laddered CR, was to take the pressure off that traditionally exists before Christmas. Conservatives in the House really, really hated it when leadership, even in their own party, used the Christmas holidays to pressure them to do something. And I think you saw some creativity from Mike